Hey, hi guys, this is Arpita Tulsyan here. I hope you all are doing good. Yes. So this particular video is mainly for all the CA final IDT amendments which are applicable for your upcoming May 25 examinations. Okay. In your May 25 examinations, the cutoff date, cutoff date for all the amendments is 31st October 2024, as you already know. So whatever are your newly added amendments till 31st October 2024, we are going to discuss in this particular video chapter wise. Okay, for each chapter, we are going to discuss all the amendments that is going to be there for the entire IDT syllabus, GST, customs, FTP, everything is going to be taken in this particular video. Yes, now if you are having the amendment notes, well and good. If you do not have, you can simply download it from my website arpitatulsyan.com. You can go to my website arpitatulsyan.com. In that, go to the free notes section and you can simply download it. I'm putting the link of that in the description of this video also, so that it becomes very simple for you to download the same. And I'll just show it to you before we start with the amendments. I'll just show it to you. So just like as you can see here, chapter wise, okay, each chapter, whatever is the addition plus whatever is the amendment. Okay, now you already know ICAI has released the new modules, okay, new study material for the May 25 examination. So in that, at some places, ICAI has added some content also, normal addition, which was not there in our syllabus, plus there are certain amendments also. So both addition as well as amendments, everything I have taken in this particular file, and this is chapter wise. Okay. And lastly, if you are having my third edition book, okay, if you are having my third edition book, which is the latest book applicable for May 25 and November 25 examinations, then you need not check this amendment because these are already incorporated in your book. If you have any older versions or if you have been following someone else's books, etc., then in that case, definitely these chapter wise amendments are going to help you. Yes, so I think we are good to go. Simply download the amendment file from the website. Yes, and you can start with the lecture. Yes, okay, so let's get started. Okay, so in the first chapter, that is GST in India and introduction, there are two things which I would like to add here. Okay, one is regarding the GST compensation cess. If you want, I can just show it to you in the textbook also, so that you will be able to relate to the same. In your textbook, you will be having a paragraph called as GST compensation cess. What you can do is you can just find it out in your textbook. If you're not able to find out, just pause the video and then you can just search for it. Can you see this paragraph called as GST compensation cess, which they had levied when we were coming from the old law to the new law, just to compensate the states, right? Just to compensate the states, they had come up with this cess called as GST compensation cess on some luxury items and demerit items, if you can recollect. So initially it was levied for a period of 5 years, that is up to 30th June 2022 it was made applicable, but then later they extended it and now it is applicable till when? Now it is applicable till 31st March 2026. Okay, can be a MCQ type of a question, that GST compensation cess is now applicable till 31st March 2026. This is one thing that we have to remember here. Okay, this was one of the addition which I want to make here in the textbook. Another addition, okay, another addition which is there here is in the content of GST Council. Okay, in your textbook, you can come to the GST Council answer near the end, almost near the end of the chapter, that is article number 279A, as you can remember, if you can remember. Yes. In GST Council was found, Finance Minister was the chairman, then they had certain functions, very important functions were discharged by the GST Council, and all those things happen. Okay, in that one of the thing which I would like to add here is this point. Yes. Okay, I'll show it to you in your amendment notes, so that addition notes, so that you can make a note of it later. Okay, now see, GST Council was a council which had many members within it. It was chaired by the finance minister, then it had many people representing from the states, many people from here and there, etc. And then they were giving the recommendations, right? Their functions included to give the recommendations that what should be the rates of GST, on which items exemption should be there, which states will be categorized as special category states, and all those things we had studied in GST Council. Okay, now see what are they telling us here? Very general, very basic. No act or proceedings of the GST Council shall be invalid. Means any work done by the GST Council will not be invalid. Okay, not be invalid means everything done by the GST Council is going to be valid. Okay, now when, in which circumstances any work done by the GST Council will be considered as valid? By reason of any vacancy or any defect in the constitution of the council. Okay, now let's say we already know that in the constitution of GST Council, can you see this on the board? Yes, in the constitution of the GST Council, there are certain members. Let's say finance minister is there, union minister of the state in charge of revenue or finance is there, etc. Let's say there is any vacancy in their place. Okay, vacancy means their position has got vacant. That can be because of resignation, that can be because of death, or that can be because of any other reason. One of the places in the GST Council is vacant. Okay, jagah khali ho gayi. The place is empty now. So can the other members, by the time we fill that vacancy, okay, by the time we fill that vacancy, by the time we appoint a new person, can others still continue to act? So the answer is yes. So the work done by others, okay, the work done by others will still be considered as valid. Are you clear with this? Okay, so just because there is a vacancy in the GST Council, or just because there was some mistake, or just because there was some defect in appointment, okay, in appointment of any members in the GST Council, just because there is a vacancy, or just because there is a mistake that happened at the time of appointment of any member in the GST Council, that does not mean that work done by the GST Council will become invalid. No, the other people can still continue to do the work. Okay, similarly, if there is any defect, okay, if there is any defect in appointment of a person as a member of the council, while appointing, that person was required to have a certain qualification, but there was a mistake. Okay, at the time of his appointment, we appointed a wrong person. So that does not mean the work done by GST Council is invalid. No, you will have to rectify the defect. Okay, but the work done by the GST Council will be considered as valid. Okay, and similarly, any procedural irregularity means if there is any irregularity, let's say GST Council was supposed to call a meeting, okay, at so many intervals, after so many months they were required to compulsorily call a meeting, but there was certain sort of delay. Okay, some procedural mistake happened here. That does not affect the merits of the case, means that does not affect any decisions which is taken by the GST Council. Okay, so what are they trying to tell us here is these small things are not going to affect any work done by the GST Council. Are you clear with this? Yes, so these two additions, these are not amendments actually, but these are the two additions which have been put in the ICAI material. So we have also included here. Just take a note of it. Okay, first one was compensation cess. Now it is extended till 31st March 2026. And second one is any work done by the GST Council will not be considered as invalid just because of three reasons. Just because there is any vacancy or defect in the formation of the council, or just because there is any defect in appointment of any member, or just because of any procedural irregularity. Okay, because of these three things, if you want, I'll highlight it again. Any vacancy or defect in constitution of the council, any defect in appointment of any person, or because of any procedural irregularity, the work done by other members of the GST Council will still be considered as valid. Are you clear till here? Yes, so these are the two additions. Just make these two additions in your book. Yes? Okay. Okay, so let's start with the amendment that we have to do for supply under GST chapter. Okay, very simple. One circular first. Let's take up this circular which is newly added. This is circular number 195/07/2023, dated 17 July 2023. Read with this new circular, That is 216/10/2024 GST dated 26 June 2024. Okay, it is a very simple circular, a very general circular, not specifically applicable to a particular section, but overall in general applicable to the supply chapter. Okay, now what we had studied under supply, under GST chapter, was if a particular transaction is considered as a supply. Okay, if a transaction is considered as a supply, then GST will be applicable. No supply, no GST. That was the logic that we had considered. Yaad aa raha hai aisa kuch? Yes, are you able to recollect that? Okay, we had done section number 7, full one big section number 7 we had done, and at the end we had gone to section number 8, that is composite and mixed supplies, etc. Are you clear till here? Yes, can we start with the circular now? Now this is a very simple clarification and a very logical clarification also, that sometimes it happens, you must have seen, sometimes it happens that when we purchase a particular product, okay, when we purchase, let's say I purchase this particular AC remote, and from whoever I am purchasing this AC remote, they will give me a warranty, right? They will give me a warranty. In that warranty, they will tell me that if something happens to this particular remote, let's say within a time period of 1 year, then we will do free replacement, we will do free repairs, etc. Right? So in some cases, the customers get it done totally for free. Okay. If some defect is covered in the warranty, then I will get everything done for free. Sometimes it happens that they say that this part is free, this part you will have to pay, etc. So in that case, is GST applicable or is GST not applicable? That is the clarification about. Okay. Now just see the heading, you will come to know. Clarification on liability to pay GST in respect of warranty replacement of parts and repair services during warranty period. See, normally if our product is not covered under warranty, then we will have to pay for that particular repair, and if we are paying for that repair, then anyway GST will be applicable. But what if it is a free replacement, or what if it is a partial free replacement, etc.? Then what will be the position of GST in such a case? That we need to find out. Yes. Okay, so now you're starting with the first issue. Let's try. Okay, let's try this first issue. There are cases where the original manufacturer offers warranty for the goods supplied by him to the customer. Okay, manufacturer. Let's say this is a remote which is belonging to, let's say for example, Samsung company. Okay, so Samsung is giving free warranty to its customers and provides replacement of parts and repair services during the warranty period without charging any consideration. I hope you understand the relevance of that. Yes, I hope you understand the relevance of that. Without charging any consideration means free. Yes. Now, whether GST would be payable on such replacement of parts or supply of repair services without any consideration from the customer as a part of warranty. So now here, can I say, since we are not paying anything to the original manufacturer, then in that case, is there any consideration involved? No, there is no consideration involved at all. Right? If there is no consideration involved, then what will be the scenario? Then they are telling that there will be no GST, no further GST is chargeable, because if there is no consideration, then on what amount will we charge the GST? However, if any additional consideration, if they say, no, you will have to pay 100 rupees extra as service charge, then on that 100 GST will be applicable. Otherwise, GST is totally not applicable, because here there is no consideration that is in. I hope I am clear with this, everyone. Yes. Okay. Then going on to the next one. Okay, what you can do here is you can simply write the small conclusion. See, as of now, I have taken here the entire clarification. Okay, entire circular that was put, I have taken it here. But for your studies reference purpose, you can just simplify it in short and write besides it, so that when you revise, it will become very, very simple. Yes. Chalo then, let's go on to the next one. Whether GST would be payable on replacement of parts or repair services provided by a distributor without any consideration from the customer. Now see, there is a new person coming in between, that is the distributor. Now, in the above case, who was giving me the warranty? Warranty was given to me by the manufacturer, by the main company. Now here, who is providing me the replacement or repair services? That is provided to me by the distributor. Okay, now let's say if I want to purchase an AC, okay, along with AC remote, obviously, I can go to Chroma shop. So Chroma is not the manufacturer of that Samsung AC. Chroma is going to be the distributor. So here the distributor is giving the service to whom? Distributor is giving the service to the customer, right? So again, what will be your conclusion? What will be your conclusion? If distributor is giving this free warranty without any consideration, okay, it is giving this free warranty to the customer, then definitely there is going to be no GST. Same logic, right? But if they are charging any additional consideration, then in that case GST will be applicable on such supply. Did you understand the difference between the first one and the second one? Yes, in the first one, original equipment manufacturer gave me the main manufacturer gave me the warranty. In the second one, the warranty was given to me by the distributor. Are you clear with this? Yes? Okay. Then after that, again, the third one is very, very simple. Let's try to understand this one. In the above scenario, where the distributor provides replacement of parts to the customer as a part of warranty on behalf of the manufacturer, whether any supply is involved between distributor to manufacturer. See, can I say manufacturer would have sold it to the distributor? Yes, and then the distributor finally sold it to the customer. Okay, now here, who gave the warranty to whom? Distributor gave the warranty to the customer. Okay, distributor did the free replacement, free repairs for the customer. But the distributor is doing this on whose behalf? The distributor is doing this on behalf of the manufacturer, right? So now in this case, now they are telling that there can be multiple circumstances there. Now they are telling if the distributor replaces the part to the customer under warranty, either using his own stock, let's say there is some part which is, which has become default, etc. If he is doing it from his own stock, means the distributor is doing it from his own stock, or the distributor is purchasing that spare part from a third party and charges the consideration from the manufacturer, means distributor is providing to the customer for free, but he is charging money from whom? He is charging money from the manufacturer, because he was doing this work on whose behalf? He was doing this work on behalf of the manufacturer. So who is going to pay the amount to whom? Manufacturer is going to pay that amount to the distributor, because distributor has done that kharcha. Distributor has done that expenses. Yes, so in this case, because there is some consideration. Now we are talking about these people. We are talking about manufacturer to distributor. Yes. So now in this case, can we say there is consideration involved? If there is consideration involved, then there will be definitely GST applicable on the same. Understanding this? Okay. Similarly, next they are telling is there may be cases where the distributor raises a requisition to the manufacturer. Distributor raises a request with the manufacturer for the parts to be replaced by him, and then the manufacturer provides the said parts to the distributor for replacement. Okay, now suppose, okay, now here in the first case, what was happening? Distributor was using his own spare parts and doing the repair, or he was purchasing from some third party and getting it reimbursed from whom? He was getting it reimbursed from the manufacturer. In the second case, they are telling that manufacturer is providing those spare parts to the distributor, and if that is provided for free, okay, if that is provided without separately charging any consideration, means manufacturer is giving the spare parts to the distributor for free and distributor is giving it to the customer for free. Any consideration involved or no consideration involved? No consideration. Can we say here also there is no consideration involved? If there is no consideration involved, then there will be no GST applicable. Are you understanding this? Okay, simple. Okay. Then after that, similarly, another circumstance. Now, there may be cases where the distributor replaces, okay, where the distributor replaces the part to the customer under warranty out of the supply already received by him from the manufacturer. Now, manufacturer had already given, let's say manufacturer had already given some spare parts to the distributor already. He had already supplied, means the manufacturer had already given it to the distributor for some consideration earlier itself, in advance. In advance, the manufacturer gave it to the distributor some spare parts that you please keep this. You please keep these spare parts with you. And whenever a customer comes to you under warranty, you can do the replacement, etc. Means in that case, can we say this supply was already recorded. Manufacturer to distributor, this supply was already recorded. Right? Yes. So now in this case, suppose if the sale bill was already made, then in that case, and if the distributor had already paid for the same, then already GST was applicable on the same. Are you clear with this? Then already GST was applicable at the time of supply that was done by the manufacturer to the distributor. Yes. Okay. And there can be another case where let's say manufacturer has given some extra parts. Okay, let's say manufacturer has given some extra remotes to the distributor for selling, but now a customer comes into picture and he says that I want replacement. So can we say the part is already kept with the distributor? Yes, the part is already kept with the distributor. Now distributor is going to do the replacement for the customer. How will the distributor, from where will the distributor do the replacement for the customer? Can we say from the new stock of remote which we had already received from the manufacturer? So can we say here the manufacturer will have to issue a credit note. Okay, manufacturer will have to issue a credit note because one of the new remote which it had given to the distributor for selling it, that the distributor had to give it to the customer for free. Right? So distributor is not going to pay any amount for the same, na? Because distributor also did not get any money from the customer. From customer to distributor, the consideration was zero. So how can the distributor pay it to the manufacturer? So manufacturer will reverse that sale transaction. One new remote sale transaction will be reversed by issuing the credit note. That is given here because we are doing replacement from the new stock. Yes. Okay. And yes, if whenever there is a credit note provision applicable at that time, okay, if you have already studied in the tax invoice chapter, well and good. If you are going to do it ahead, you will come to know whenever we are issuing any debit note or whenever we are issuing any credit note, at that time, the tax liability also gets adjusted. Right? Okay. Yes. And now let's go to the last circumstance. The last circumstances, there may be cases where the distributor replaces the goods or its parts to the customer under warranty by using his stock and then raises a request with the manufacturer for the goods. Again, now here, first the distributor is providing the service to whom? First the distributor is providing the service to the customer. Okay, he is using his own stock and he is providing the service to the customer. This part is done. Okay, here if there is a GST charged, if there is a consideration charge, then GST will be applicable. If no consideration, then no GST. Then the distributor takes that part. Then the distributor takes that part from the manufacturer, and if manufacturer is giving it to the distributor for free, if he is giving it for free, then again there will be no GST paid. Okay, so basically, see, if there is any consideration, the ultimate conclusion is going to remain the same. If there is no consideration involved, then there will be no GST applicable. But if there is a consideration involved, then there will be GST applicable. Yes. Then last two cases. Now, if the distributor provides repair service in addition to replacement, okay, repair service in addition to replacement to the customer without any consideration as a part of warranty on behalf of the manufacturer, but charges the manufacturer for such repair services. Okay, now see, if replacement of parts is done, then above point we have already seen. From where will we get the spare parts, etc., that we have already seen here. This third point was mainly talking about replacement only. Now they are asking, what if along with replacement there is repair services also done? See, for replacement we have already studied. Okay, now what if distributor is providing the repair to the customer? Distributor is providing the repair to the customer for free. Okay, but he is then charging the money. See, ultimately, who would have incurred the expense? The distributor would have incurred the expense. He gave it to the customer for free because it was under warranty. But now he's taking the reimbursement from whom? He's taking the reimbursement from the manufacturer. So if there is a consideration involved between manufacturer to distributor, then on this transaction, GST will also be applicable because there is a consideration involved. Okay, here we are mainly talking about repair. Okay, here we are mainly talking about repair. Then after that, going to the next one. See what is the next one. Sometimes companies provide offers of extended warranty. You must have seen, na, while purchasing, they tell you, see, 1 year warranty is included. You can go with extra additional 2 year warranty and all those things at the time of original supply or just before the expiry of the warranty period, whether GST would be payable in both of these cases. Okay, now see what are they telling. Suppose if we have taken, if we have like while purchasing the AC, they had given me normally you will get 1 year warranty, and at that time only they are giving me some offer in which they are giving me plus 2 years warranty, that is extended warranty of plus 2 years. Then in that case, this extended warranty, okay, try to understand, this extended warranty will become part of the value because of the composite supply, section number 8. Remember, in composite supply, if I am purchasing AC plus I am taking extended warranty, then my principal supply is going to be AC, right? And along with that, if I am paying something for the, see, obviously you will have to pay something for the extended warranty. Let's say I am purchasing AC of 40,000 and I am purchasing extended warranty of 5,000. Then what will be the rate of GST applicable? On total 45,000, the rate of principal supply, the rate of AC will be applicable on the same. Because why have I taken extended warranty? Because AC was my main supply. Yes, that is given here. Yes, acha. But what if extended warranty is given to me by someone else? It was not given to me by the AC supplier, it was given to me by a third party. If it is given by two different people, then I would have paid 40,000 to someone and I would have paid 5,000 to someone else. Then respective rates of GST will be applicable. Yes, acha. Next case is I am taking extended warranty after my original warranty gets over. Let's say my original warranty was of 1 year, and once this 1 year got over, 1 year khatam hone ke baad, now I am planning to take an extended warranty. Then this will be considered as a separate supply. Okay, this will be considered as what? This will be considered as a separate supply. This cannot be considered as a composite supply. Only when I was taking it with the main supply, then you can call it as a composite supply. Now this is a separate supply. So AC will be different and extended warranty will be considered as a supply of service, and rate of GST on that will be different. Normal, understandable, this much everyone manageable till here? Yes? Okay. Done. So this was basically your new circular that was inserted under your supply under GST chapter, which was mainly pertaining to warranty, repairs and replacements which are done under warranty. Manageable? Okay. Okay, so let's continue with the other circulars and other amendments. Yes, we have 3 more circulars which they have added in the supply chapter. The first one that we have just now completed was related to warranty, that is completed. Now let's go to the next one. Next one is also simple. It is a circular. Okay, whatever we are doing, this is not amendment. Okay, whatever in this particular supply chapter we are doing, these are additions. Okay, so whatever lectures you have watched first, that is going to remain as it is. Nothing is going to change, and these are going to be the additions. Let's start with the next circular, circular number 215/9/2024. Now this is talking about insurance claim in case of motor vehicle. Okay, insurance claim in case of motor vehicle. It is very, very simple. Now let's say if suppose I am owing a particular motor vehicle and that has been damaged maybe because of an accident or something like that, then in that case I will be going to the insurance company, right? I will be going to the insurance company and I will be asking for the claim. Now there are two types. Now first of all, whenever we go to insurance company and we ask for a claim, okay, whatever claim you get, that is an actionable claim. Okay, it is an actionable claim. It is considered as goods as per the definition, but it is not taxable. Okay, it is not coming under GST as per schedule number 3. Do you recollect that? Yes. Okay. So whatever claim we are going to get from insurance company, that is going to be covered under schedule number 3. So that is not considered as a supply. So ma'am, then why this circular? What are we going to study in this particular circular? Let's try to understand that. Okay. See what are they telling? In case of motor vehicle, insurance provided by insurance companies engaged in providing general insurance services. Such companies insure the cost of repairs or damages of motor vehicle incurred by the policyholder. That is, whatever cost we incur in getting our vehicle repaired, etc., that we get as a claim from the insurance company. In case a claim is made by an insurer for damage of motor vehicle while settling the said insurance claim, where the general insurance company is as per the pre-decided terms. Now, what can be the two different types of terms that can be there with the insurance company? Just try to understand this. Okay, you can refer this, whatever we are doing, you can refer this from our third edition book also, or you can refer it from the amendment sheet also. Third edition book, if you have, well and good. If you do not have, then the amendment files are available, amendment notes are available on the website. You can take it from there. Okay, now see what are the two types of contract that are possible here. First of all, what they do is they deduct the value of salvage or wreckage of the motor vehicle as deductibles from the claim amount paid to the insured, and the salvage remains the property of the insured, and the insurance companies are not liable to discharge the GST liability on the same. Okay, now let's say, for example, there was a damage done to the motor vehicle of, let's say for example 10,000 rupees. Okay, this is what we are claiming from. There is a particular part of the car or the motor vehicle, etc., which got destroyed, and now I am asking for how much? Now I am asking for rupees 10,000 from the insurance company. Okay, let's call this 10,000 as what? Let's call this 10,000 as the claim amount. Okay, now one type of contract is, what will the insurance company do? Insurance company will say that, okay, let's say this particular part, okay, this is just an example. Let's say this particular part of the car was damaged. Okay, and this is not fully damaged. Okay, we can still sell it as salvage, we can still sell it as scrap, and we can realize some money out of it, because there is some metal or there will be some other thing of which we can simply derive the money. So insurance company will tell you, what do you want us, insurance company will ask us, what do you want us to do? So we will say that this part I will keep with myself, I will go and sell it in the market. Okay, this is what you are having in your mind. And so insurance company will say, okay, now if you are going to sell that particular part in the market, you will derive some money out of it. And as per us, the salvage value is, let's say for example, 2,000 rupees of that particular part. So can we say insurance company is deducting certain salvage? Otherwise it is going to be a gain for you. Now, otherwise if they do not deduct, you are going to take 10,000 from the insurance company plus 2,000 you will get it from the salvage, from the scrap sale. Yes. So 10,000 minus 2,000. Now insurance company is going to give you how much? Insurance company is going to give you this 8,000. Okay. Now this is the final, this is the net claim amount that the insurance company is going to give you. Yes, this is an actionable claim. On this, there is no GST liability applicable. Okay, now the question in the circular is talking about this 2,000. The 2,000 which was deducted. On this, is the insurance company required to pay any GST liability? Answer is no. Okay, why? Why? Is this salvage belonging to the insurance company, or is this going to belong to the insured? That is going to belong to the insured. So there is going to be no GST liability on the insurance company. Are you understanding this? Yes, this is one type of contract that happens where the insured says what? Where the insured says that whatever is the salvage, I will derive the money out of it. So insurance company simply deducts that amount and give it to you. And that part, that partially damaged part, is now your property. This is not the property of that insured person. Okay, another point is, another type of contract is, insurance company will tell you that, sir, okay, we will pay you total 10,000 rupees as claim, but this part you give it to us. And you as an insured, you are least interested in going and selling it to a scrap dealer, etc. You say you keep all the parts, all the old damaged part, everything, but give me a particular claim amount. So the insurance company is giving you a claim of 10,000 rupees, and now that scrap, okay, that scrap part or that salvage part is there with the insurance company. Okay, now that part, insurance company is going to sell it or maybe reuse it after refurbishing it, etc. Now we as an insured, we are going to get how much? We will get this 10,000 claim. On that, there is anyway no GST applicable, same logic. Okay, now, what about this scrap part? Now, can we say insurance company is going to be a registered person? Insurance company is going to go to the market and it is going to sell off this scrap part. Let's say it goes to the market and sell off this scrap for rupees 10,000. Let's say, okay, let's say it sells off this scrap for rupees 2,000. Now, when insurance company is going to sell this 2,000, okay, now can we say it is doing it in the course or furtherance of business, and it is going to do for some consideration. So now on this, the GST will be the obligation of the insurance company. Are you clear with this? See what are they writing? And the insurance company will be obligated to discharge the GST on supply of salvage to the salvage buyer. So whenever it is selling, whenever insurance company is selling this to the salvage buyer, to the scrap holder, etc., at that time GST liability is going to be on the insurance company. Are you clear with this? So basically, when it becomes a property of the insurance company, it is going to sell it, at that time GST will be applicable. Otherwise, GST liability is not there on the insurance company. Are you clear with this? This is your circular. Okay, now going on to the next two more circulars. Everyone, let's give it a try. Circular number 234 oblique 28 oblique 2024, dated 11th October, very recent circular. Now see what are they asking, what are they telling us here? They are talking about some location charges or preferential location charges which is collected along with consideration of the property. So now whenever we are purchasing, okay, whenever we are purchasing any residential property or whenever we are purchasing any commercial property or something like that, okay, depending upon that OCN, etc., we have already studied that in which case transfer of land and building will be transfer of building will be taxable, and in which case it will not be taxable. Okay, now I'm not getting into the transaction related to transfer of properties. Okay, now we are going to talk about these charges called as location charges and preferential location charges. Okay, now let's say for example, now we already know, okay, just to revise, we already know that whenever we are paying, whenever the purchaser is paying any consideration before the completion certificate or before first occupation, whichever is earlier, okay, then at that time GST will be applicable. And if the entire consideration is paid later, then it will not be applicable because it is considered as an immovable property. Okay, now let's say whenever you are purchasing any of this property, and while purchasing the property, along with the price of the property, you are also paying some extra consideration for good location. Okay, let's say one part of the building or one side of the building is facing the ceiling, okay, sea or some beach or something like that, and you pay some extra 10 lakh rupees, you pay some extra 20 lakh rupees for getting that good location. So now the question arises is the extra consideration that you are paying for good location. Okay, the extra consideration that you're paying for good location, what about its taxability? Okay, what about its taxability? Will it be taxable? Will it not be taxable, etc.? So it is a very simple thing. It is a very simple clarification that they have given, that this becomes a composite supply, right? Where the main property, where the main purchase of property is the principal supply, and the extra consideration that you are paying for the location charges or preferential charges, that becomes your composite supply. Okay, if it comes under the term called as composite supply as per section number 8, then what will be the tax liability? Okay, that rate of tax will be applicable, or that effect will be applicable, which is applicable to the principal supply. So if the main supply is taxable, then even this will be taxable. If the main supply is not taxable, then even this will not be taxable. Okay, why, ma'am? Why composite supply? Because can we say these two are naturally bundled? Why are you paying for the location charges? Why are you paying for the preferential location charges? Because you have bought this property. So buying the property at the first stage, that itself is the principal supply. So whatever is the tax effect of the principal supply, same is going to be of the ancillary supply. Very clear, very, very logical. Yes, that was your circular. And now going on to the last circular. Okay, again, this is an addition. It is not an amendment. I'm repeating it again and again. This is not an amendment. This is an addition. Yes. Okay. Let's start. Now, this is circular number 213/7/2024. Now, we have already studied two things I want you to recollect before we get into this. Okay, one thing that we have studied is any services provided by an employee to an employer. Okay, any services provided by an employee to an employer during the course of employment. Can we say that is not a supply as per schedule number 3? Okay, during employment. So it is not a supply at all. That is one thing. Okay, another thing that we had studied is any transaction which is done in securities. Okay, any money and securities, any transaction that is done in money and securities, that is neither considered as supply of goods nor considered as supply of service. Right? Manageable till here? Okay. So now see what are they, what type of transaction are they framing here? So here they are telling us that let's say for example, there is a, I'll write it here. Okay. Let's say there is a foreign holding company. Okay, there is a holding company situated outside India, foreign holding company, and this company is having its Indian subsidiary company. Okay, it is having its Indian subsidiary company, and Indian subsidiary company will be having its employees. Normal. Okay, foreign holding company is there. It is having one of its subsidiary here in India, and it is having many employees here in India. Normal transaction. Okay. Now, these employees, the company has given, okay, the Indian subsidiary company has given an option. Okay, it is given an option of ESOP, etc., ESOP, ESPP, etc., to the employees. Okay, many companies, ESOP option you already know. So, Indian subsidiary company is giving an option to the employees to buy the shares. To buy whose shares? To buy the shares of the foreign holding company. Okay. So employees are going to get what? Employees are going to get the shares of it. They are going to get the shares of this foreign holding company. Ma'am, how will they get? How will they get? So this foreign holding company will transfer its shares to the Indian subsidiary company, for which the Indian subsidiary company is going to pay the consideration, normal cost to cost consideration it will pay to the foreign holding company, and then this Indian subsidiary company will give the shares to the employees. So basically Indian subsidiary company is taking the shares from the foreign holding company and then allotting it to its employees. Now, two questions which I want to ask you here is, first of all, this transaction. When the shares are given, when the securities are given by Indian subsidiary company to the employees as a remuneration, right? Can we say it is a part of remuneration? It is a part of C2C, etc. Yes. So as a in form of remuneration, when the employees are getting the shares, okay, or options of the company, the shares of the company, then in that case, what about the GST? So answer is there will be no GST applicable because this transaction is purely covered under schedule number 3. Can we say services are provided by the employees and in return they are getting the ESOP? So this will be covered under schedule number 3, services provided by employee to the employer during the course of employment. So can we say there will be no GST applicable on the same? This is the first thing. Okay, another thing. Now what about this transaction? What about this transaction? The transaction between foreign company and Indian subsidiary company. So can we say foreign holding company is giving its shares, foreign holding company, it is giving its shares to the Indian subsidiary company, for which Indian subsidiary company is also going to pay the cost to cost consideration. So can we say this is a transaction in securities? Transfer of securities. If it is a transfer of securities, again GST will not be applicable. Am I very, very clear with this? Okay. And last thing, okay, last option. Suppose, like I have been mentioning, cost to cost. What if foreign holding company, this company, what if foreign holding company is charging certain commission? What if it is charging certain fees? Or what if it is charging certain extra, certain markup on the value of shares, etc.? Then can we say that is an additional consideration? Okay, then it becomes an additional consideration and that will be covered under services then. That will not be covered under security. It is just like brokerage kind of a thing. Okay, so that will be covered under services. Then GST liability will arise. Okay, then GST liability will arise. Are you clear with this? Yes, and then it will be considered, yes, that we have imported certain services, foreign company, that we have imported certain services, and then the Indian subsidiary company will be liable to pay the GST on the. Are you clear with it? So till the time the transactions are cost to cost, okay, at that time there will be no GST liability. But if there is any extra amount which the foreign holding company is charging from the Indian subsidiary company, then in that case GST liability will come into picture. Are you clear till here, everyone? Yes? Okay. So these were your amendments, not amendments, these were your additions. Okay, additional circulars that are added in the supply under GST chapter. I hope this much was manageable for you. Yes? Okay, so let's start with the next chapter, additions. Okay, additions and amendments. So two things we have to do it here. One is in charge of GST chapter. Do you recollect we had done reverse charge mechanism provisions? Yes. So in reverse charge, first we did about goods. Do you recollect? The list of goods were given in case of reverse charge mechanism. In that there is one addition. Okay, in that there is one addition relating to metal scrap. Okay, we had other things. Remember cashew nuts not peeled or shelled, and then tobacco leaves, raw cotton, silk yarn, and all those things. Along with that, one more thing has been added, that is metal scrap. Okay, metal scrap when it is supplied by an unregistered person to a registered person, at that time the recipient, okay, recipient, that is the registered person, will be liable to pay the tax on the same. Okay, so this one small addition is there in the list of goods. Okay, and then after that there is another addition of entry. Okay, there is another addition of entry in services. In your textbook or in your amendment notes, please come to point number 5AB. Okay, please come to point number 5AB. We will discuss point number 5AB in detail. Okay, so let's start with the next chapter, amendments, that is charge of GST. Only one small amendment is there. In charge of GST chapter, we had studied about RCM provisions. Remember, RCM we had done the list of goods also, and RCM we had done the list of services also. So in services, do you recollect we had something called as entry number 5AA, residential dwelling. Yes, when there was a renting of residential dwelling done by any person to a registered person. Okay, if any person is renting a residential property to any registered person, then in that case they had told that we don't want to take any risk and the RCM provisions will be applicable. That is, the registered person will be liable to pay the tax on the same. But that provision was specifically applicable for residential dwelling. Right now they have inserted one specific point, that is your entry number 5AB, which is talking about commercial property, that is any immovable property other than residential dwelling. Other than residential dwelling, so we can take the example of a commercial property, and here they are telling that if any unregistered person, okay, if let's say any unregistered person who is not registered under GST, let's say such a person is having a commercial property and that person is giving that commercial property on rent to a registered person. Can we say commercial property used for doing business, and this person is going to earn rentals, good rentals out of it? And if he is an unregistered person, then this is going to be a loss of revenue to the government. So what are they telling? If unregistered person is renting this commercial property to a registered person, then also reverse charge provisions will be applicable, and this registered person will be liable to he will be paying the rentals to that unregistered person. That matter is over, and after that he is required to pay the tax to the government. After paying the tax to the government, he can take the ITC of the same. Right? So new point added under this charge of GST, that is entry number 5AB. I hope I am very, very clear, very simple and very, very logical. Yes, this was the addition in your charge of GST chapter. Yes. Okay. Okay, so let's start with the next chapter amendments, that is exemptions from GST. Let's try to understand. Very, very simple amendments, very small amendments. Now, there are few entries which have been amended and there are few entries which have been added. Okay, let's deal with each of them one by one. Okay, so now do you recollect we had one of the entry called as educational institution? Yes, in your textbook, please come to that educational institution point. Yes, in educational institution, do you recollect we had three types of educational institution? Yes, three types of educational institution was there. First one was from preschool to higher secondary school. That was the first one. Next one was any such educational institution which is providing any qualification which is recognized by law. And third one was that vocational educational course. In that there is a small change that is done. Do you recollect? Approved vocational educational course means any course which is run by ITI or ITC. ITI stands for Industrial Training Institute or Industrial Training Center, which is affiliated to, earlier we had a council called as NCVT. Okay, now they have just changed the name, that is affiliated to National Council for Vocational Education and Training. That is NCVET. Instead of NCVT, it is now NCVET. So wherever we had this NCVT, there we are going to replace it with NCVET. That is one of the small amendments in your education institution. Nothing is going to change. Everything under your education institution is going to remain the same, just that this small thing needs to be changed. I hope I'm very, very clear with this. Okay, so this, just make this correction or just make this amendment in your book, not correction. Yes, if you have the third edition book and onwards, then anyway it is done in your book. Otherwise, just do this change. Yes, okay. Then after that, new entry, entry number 66A. Okay, just below your educational institution. Because it is related to educational institution, that's why just below your educational institution, there is one more new entry, that has been introduced. Let's try to do that particular entry. Okay. So now entry number 66A, it basically talks about affiliation services. Okay, affiliation services. Now here, what are they trying to say? Do you understand a particular board? Okay, educational board, state board, central board, Maharashtra board, Gujarat board, Chennai board, Tamil Nadu board, etc. Do you understand that? Yes. Okay. So now let's say any particular central board or any state board, okay, educational board I am talking about, any central educational board or any state educational board, etc. That is the main board, okay, which decides the syllabus, which is to be learned by, which is to be studied by the students, etc. Within this board gives affiliation to many schools, colleges, etc. Right, it gives affiliation services. Affiliation services means what? Let's say for example, let's talk about my state. I'm talking about my state, that is the state of Maharashtra. Okay, so Maharashtra also has its own Maharashtra Educational Board. Okay, this is the board which conducts the examinations and all those. Now within Maharashtra there will be many schools, right? There will be many schools which will be affiliated to Maharashtra Educational Board, right? Means these schools are following the syllabus. These schools are following the syllabus. They are following the orders which is given by the Maharashtra Educational Board. Okay. Now, there are certain boards, okay, there are certain schools which are not affiliated to this Maharashtra Educational Board. Possible. Okay, there will be certain schools, etc., which are not affiliated. So now, ma'am, what is the benefit of getting affiliated, etc.? So if my school, okay, if my school is affiliated to Maharashtra Educational Board, then in that case, Maharashtra Educational Board will check whether my school has proper infrastructure or not, whether my school's financial position is good or not, whether my school is following the proper syllabus or not, and then these schools also get, okay, these schools can also conduct multiple courses. If I am affiliated, then my school can conduct multiple courses which are notified by the Maharashtra Educational Board. Plus it also gets some subsidy, plus it also gets some financial assistance whenever required, and all those help. Okay. See, it is not nothing relating to admission of students, etc. No. But if I am affiliated to a board, okay, if I am affiliated to a board, then that board is going to check whether my school's infrastructure is proper or not, whether my school is having proper teachers or not, proper qualification teachers or not. And if yes, then my school can start following. My school can start following. I can say, okay, my school can say that we are affiliated to Maharashtra Educational Board, and that builds a confidence, that builds a faith in the parents also. Okay, that okay, my child is going to a school which is affiliated to a state. Okay, so now, ma'am, why are we talking about all these things under GST? So this is because Maharashtra Educational Board provides, okay, it provides affiliation services. Okay, it provides affiliation services for which the school is required to pay the consideration, one-time consideration to the either one time or yearly once, that way. Okay, it is going to pay the consideration to the board. Okay, who is providing the affiliation service? Maharashtra Educational Board or any state educational board or any central educational board is providing the affiliation service for which the consideration is paid by these schools. So now we are going to talk about its taxability. Okay, now we are going to talk about its taxability. See what are they telling us here. Services of affiliation provided by central or state educational board or council or any similar body. Okay, central board, state board, etc. by whatever name called. To whom? To whom? To a school which is established, owned or controlled by which school? By central, the school which is controlled or owned by central government, state government, union territory, local authority, governmental authority or government entity. Means affiliation services will be exempted. See, we are doing exemption chapter and we are doing entry number 66A, means we are talking about exemption cases. So now in this case, when Maharashtra Educational Board or any central educational board is providing these affiliation services to a government owned school, not to private school, only to a state government, central government, union territory, governmental authority owned schools, then these services will be totally exempted. Otherwise, it will be totally taxable. Okay. So see how we have summarized it here. Entry number 66A, affiliation provided by university to colleges. Colleges were nowhere there into the picture because only schools were there into the picture. Here. Only schools were there. So this is going to be taxable. Okay. Similarly, affiliation provided by central and state educational board to other schools. Other schools means we are talking about private schools. Then even that will be taxable. So only what will be exempted? Affiliation services provided to government schools. Okay, affiliation services provided to government schools, that will be totally exempted. To colleges will be fully taxable. To other schools will be fully taxable. Yes, I have also included now because this amendment is applicable. So now I have also included this in the third edition book, and here you can just write, okay, when given to colleges, then it is going to be taxable. When it is given to other schools, okay, when it is given to other schools, then in that case, that is private schools, then also it is going to be taxable. So ma'am, what is exempted? When this services of affiliation is provided by this board, central or state board, to whom? To government schools. Okay, to government schools, only then it is going to be exempted. Otherwise, it is going to be fully taxed. I hope I am very, very clear till here. Yes. So this was your next amendment in your exemption chapter. Can we go ahead? Yes. Okay. Then after that, going to the next one, entry number 9E. Okay, entry number 9E. Acha, before entry number 9E, we can do one more entry, that is entry number 69, which is again I have put it in educational services only. Entry number 69, everyone, in your educational services only. We already had one entry number 69. I will show it to you what was there earlier if you have studied. I don't know if you recollect this or not. Any services provided by NSDC or SSC, skill development programs, etc. Okay, this was there in your educational as entry number 69. this entire entry number 69 has been replaced. Okay, this has been replaced, and in your third edition book and onwards, I have put the new entry. Okay, in the amendment notes also it is available. This entry is replaced. I have written here. Okay, so here, when any services are provided by NSDC, that is same National Skill Development Corporation, which is a corporation which is set up by the government, or by NCVET, that National Council for Vocational Education and Training, or any awarding body which is recognized by NCVET, or any assessment agency recognized by NCVET, or any trading body accredited with an awarding body that is recognized by NCVT. Means when there are any such skill development type of services provided by NSDC or provided by NCVET or affiliated. Okay, what type of programs are they providing, or what type of skill development services are they providing? That is in relation to National Skill Development Program, Vocational Skill Development Program, or any national skill qualification framework, where they are giving you certain skills, where they are enhancing certain skills, where they are giving you certain qualifications. Whenever these are nothing but what? These are nothing but the associations, institutions, corporations which are set up by the government of India, and government says that we will bring some skill development programs. That is, you can come, you can take the training with us, and you will, you can enhance certain of your skills, and then you will be eligible to get a job or something like that. So whenever these services are provided by these people, NSDC, NCVET, etc., then it is going to be totally. Are you clear with this? Okay. So this was not a very difficult entry, very simple entry actually it was. So this was your entry number 69, which has got replaced. Yes. Okay. Then after that, we'll go back. Come to entry number. This is a new entry that was inserted. Entry number 9E. Okay. Entry number 9E and entry number 9F. Let's go to that. Yes. In your textbook, we had a heading called as services provided by government. Okay, services provided. We had two. One was services provided by government, another one was services provided to government. So first come in services provided by government. Okay, in that we had the series of entry number 9, 9C, 9D, etc. In that I have added two entries, entry number 9E and entry number 9F. Entry number 9E and entry number 9F. Same thing I'm showing you from the amendment notes also. So what is the addition here? Entry number 9E says that when services are provided by Ministry of Railways. Okay, when services are provided by Ministry of Railways, Indian Railways, to individuals. Okay, now see, one is transportation of passenger service, another one is transportation of goods service. We are not talking about that. Now here, which services are they talking about? They are talking about platform tickets. Okay, whenever we go to drop someone, or whenever we have any, whenever we go to the railway platform, we cannot go without ticket unless we are traveling. Okay, if you are traveling, then you should be having the travel ticket. But let's say I have gone to drop my parents at the railway station, then even I will have to take a platform ticket from the counter. So on that platform ticket, GST is exempted. Okay, similarly, retiring rooms, waiting rooms are there at the railway stations, cloakroom services where I can keep my luggage if my train is delayed or if I have arrived early at the station. And similarly, battery operated car services, which they generally provide to senior citizens, handicapped persons, special persons, etc. For that, they charge certain amount, right? For whatever amount they charge, on that GST is going to be totally exempt. Okay, so these are the services provided by whom? These are the services provided by Ministry of Railways to any individual, then those services will be totally exempted from GST. This has been added in entry number 9. I hope I'm very, very clear with this. Very simple. Yes. Okay. And one more entry that is added here is entry number 9F. In your textbook, I have added just below entry number 9E itself. In entry number 9F, services provided by one zone or division under Ministry of Railways to another zone or division under Ministry of Railways. So now Ministry of Railways totally comes under central government, right? Within this, there will be multiple divisions. Yes, there will be like for example, there can be a western division, western zone. Okay, there can be a southern zone also. So if services are provided by one zone to another, one division to another, between the government itself, then it is going to be any type of services. Okay, any type of services, then GST is going to be totally exempt. I hope I am very clear till here. Yes, simple. So inter-division or inter-zone services provided by one division to another division, GST, any services, okay, any services, that will be totally exempted. And this one, normal platform ticket sale or retiring room services, cloakroom services, battery EV car, which is there at the railway station for if someone cannot walk, etc. For that, whatever consideration they are charging on that, GST is going to be totally exempt. Yes, simple, manageable till here. Check. Okay. Then after that, let's go ahead to the next amendment. In the same heading, in services provided by government, in the same heading, you will find one more new entry that is inserted, that is entry number 25A. Okay, come to entry number 25A. Yes, here it is, entry number 25A. Okay. Okay. Entry number 25A, again, supply of services by way of providing metering equipment on rent, testing for meters, transformers, capacitors, etc., releasing electricity connection, shifting of meter or service line, issuing duplicate bills, etc., which are incidental or ancillary to supply and distribution of electricity, will be totally exempted. Okay, now see, here we already had entry number 25. Okay, we already had entry number 25 in our syllabus, where we had studied transmission and distribution of electricity. Transmission and distribution of electricity, on that GST is going to be exempted. But then they had told that some extra charges, okay, some extra charges like testing fees, labor charges for shifting of meters, etc., charges for duplicate bills, etc., this was earlier liable to GST. Okay, this was earlier liable to GST. Now what they have done is they have inserted a new entry, that is entry number 25A, where they are telling that whenever they are doing any testing, okay, ancillary related services, when they are doing any meter testing services, or whenever they are providing you any transformer testing services or capacitor testing services, okay, or when they are doing some shifting of meter services, they are doing shifting of meter from one place to another, if they are providing such services, okay, if they are issuing duplicate bills now, okay, if they are issuing duplicate bills, etc., then in such cases, these services will be totally exempted. So now they are telling any ancillary services, okay, related to transmission or transmission and distribution of electricity, related to these, if they are providing you any services, even that is going to be exempted from GST. So can we say this note, okay, this note of entry number 25, this becomes now irrelevant. Okay, this note of entry number 25. So entry number 25 will be restricted to transmission and distribution of electricity by electricity companies. That is going to be totally exempted, and even ancillary services provided by this distribution companies, transmission and distribution companies, even those will be now exempted under GST under entry number 25. Okay, that was another amendment that is coming here. Okay, then after that, going to the next one, yes, services provided to government. Come to the point called as next one, next heading, services provided to government. Okay, now in this case, see the diagram here, entry number 44A. Now, if there are any research and development services, okay, research and development services means someone is doing research and development for me. Okay, if there are certain research and development services provided by whom? Okay, when it is provided by a government entity or it is provided by any research association, university, college or other institution which is notified under section 35 of the Income Tax Act. Okay, now I don't know how many of you all will be able to recollect, but just try in your direct taxes, in your income taxes, you had a third head of income, that is PGBP, profits or gains from business or profession. In that you had one of the section, that is section number 35, scientific association, scientific research association, etc. What was the work of those associations? To do scientific research. So when any government entity or when any such research association is providing such services to the government, okay, when they are providing certain services to the government, what services? They are doing research and development for government, and government is going to pay them the consideration which is going to be in form of grants, okay, which is going to be in form of donations, which is going to be in form of grants, etc. Then on this amount, GST is going to be totally exempt. Okay, on this amount, the GST is going to be totally exempted, provided all these conditions gets fulfilled. Who should be the service provider? Government entity or that notified scientific association should be the service provider. They are providing the services to the government, and government in return is giving the consideration which is going to be in form of grants. On that, GST is going to be exempted, but with one condition, that research association, university, college, whichever is notified under section number 35 should be notified. Okay, it should be a notified association institution at the time of supply. Means whenever they are doing this research and development service, or whenever they are providing the research and development service, at that time such association or university should be a notified one. Then in that case, the benefit that you are going to get under GST is going to be totally exempted on this. Yes, this was which entry number? This was entry number 44A. Okay, this was entry number 44A that we have just now completed. Okay, let's go ahead to the next one. Okay, coming to the next one, that is GTA services, goods transportation services. Everyone in your textbook, please come to goods transportation service. Goods transportation service. There is a circular that is added in this GTA services. Let's try to understand. It is very, very simple actually. Okay, now the circular that was added is, just try to understand. Okay, when we did this goods transportation services, do you recollect we studied about courier services also? And in some cases, GTA services will be taxable under forward charge, some it will be taxable under reverse charge, some will be exempted, etc. Okay, so now what are they telling us here basically is, see, main work of GTA is to provide the transportation service. Right, main work of GTA is to provide the transportation service, and taxability of that we have already studied. Okay, taxability of that we have already studied. We had done this under RCM chapter also. Okay, now nothing is going to change in that. Now what they are telling us by way of a circular here is, if GTA is providing some ancillary services also, like loading service, okay, goods loading service, goods unloading service, or something like that, packing service, if GTA is providing these services along with transportation service, then can we say this loading or unloading will be considered as composite supply? Yes, this entire thing will be considered as composite supply. So what will be the tax effect? Now I am giving you the hint. If this will be considered as a composite supply, what will be the tax effect of this loading and unloading service? So can we say the same taxability as is applicable to the principal supply? If your transportation will be considered as principal supply, so if principal supply is taxable, then even this will be taxable at same rate. If principal supply is exempted, then even this is going to be exempt. Right? Okay. But what if such services are not provided in the course of transportation? Means GTA did not provide the transportation service, but GTA only provided the loading unloading services. Then it will be separately taxable. Then no doubt in that at all. Then it is going to be separately taxed. Normal, manageable. Yes. Okay. That is the circular which we have added here. ठीक है. Then after that, let's go ahead to the next one. Going to the next one, that is entry number 12, renting of immovable property related services. Let's go to this one. Renting of immovable property related services. Two things we have to do here, and important also. In your amendment sheet, there is entry number 12 and entry number 12A. And if you are there in your textbook, then please come to renting of immovable property related services. Yes. Okay. So now this renting of immovable property related services, this is nothing new. We had already covered this. Okay. We had already covered this. This was where they had told us that if residential dwelling, which is used as residence, if that is rented, then in that case on its own account for personal use, etc., then in that case it was totally exempted from GST. Okay, in both the cases, when it is given to a registered person also and when it is given to an unregistered person also, in both the cases it will be exempted. But if it was given for commercial purpose, then it was taxable. If it was given for a residential use, but we were claiming it as an expense in our books of accounts for business purpose, basically if it was given, then also it is going to be taxable, right? This is what we had studied. Now in that there is one explanation that is added, that is explanation number 2. Okay, here can you see this explanation number 2 newly inserted in entry number 12. Now what is that explanation? It is very, very simple. Basically they are telling that this entire entry, that is this entire point of entry number 12 is not applicable for accommodation services, which is provided by hostels, camp, paying PG accommodations, or for students in the student residence. See here, what are they trying to tell us here is, if hostels, camps, PG, etc., if they are providing such accommodation services, even that is for residents. Okay, so please do not include it in entry number 12. Okay, ma'am, why should we not include it in entry number 12? Because they have introduced a new entry for the same. Okay, so please exclude these accommodation services. Okay, temporary accommodation services. Please exclude these accommodation services from entry number 12. Okay, please exclude. Ma'am, why to exclude these from entry number 12? Because for that separately we have got entry number 12. I hope I am very, very clear with this. Okay, that is the explanation that is inserted for entry number 12. Now let's go and understand what do you mean by entry number 12A. Okay, or what is put in entry number 12A. So in entry number 12A, what are they telling us here? Supply of accommodation services having value of supply, accommodation services which is provided for students, okay, or which is provided by hostels, which is provided by camps, which is provided by PG, etc., whose value is less than or equal to 20,000 rupees per month per person. Okay, value of supply is less than or equal to 20,000 rupees per person per month, provided that accommodation service is supplied for a minimum continuous period of 90 days. Okay. So here, what are the conditions to be fulfilled? First of all, it should be accommodation services. Okay. How do you differentiate accommodation? See, whenever we talk about rental, generally rental is like 11 months agreement, 1 year agreement, 3 years agreement, etc. Okay. Accommodation services is like kind of temporary. Okay, it is kind of temporary. So if there is a service provider who is providing accommodation services to students or to any other person, then in that case, whether it will be taxable or whether it will be exempted, it depends upon certain condition. First of all, value of supply, that is the charges that you are charging should be less than or equal to 20,000 per month. Okay, per person, less than or equal to 20,000 per month, and you should be giving them this for a continuous period of at least how many days? For a minimum continuous period of at least 90 days, and per month consideration that you are charging should be less than or equal to 20,000 per month. If all of these conditions are getting fulfilled, then in that case it is going to be exempted. Okay, let's say you have given hostel accommodation services, let's say for 30 days only, okay, irrespective of 20,000 per month, it is going to be taxable. I hope you are understanding this. Yes, similarly, let's say you are giving hostel accommodation or camp accommodation service for 6 long months. Okay, that is more than 90 days time period. And if the consideration is also less than or equal to 20,000 per month, then in that case, again, it is going to be totally exempt. Yes. Okay. So you have to check these conditions. You have to check these conditions, and accordingly, you'll have to decide whether it is taxable or whether it is exempted. And yes, please remove accommodation services from the above entry. Okay, please remove it from above entry. Accommodation services are not at all included in entry number 12. Okay, so what is the relevance of that? Relevance of that is, if it comes under entry number 12A, then it is going to be exempted. If it does not come under entry number 12A, then it is going to be fully taxable. Are you understanding this? Yes? Check. Okay, so this was your entry number 12A. This is also done. Okay. Then after that, going to the next one, come to the next heading. Please come to the next entry, that is insurance business services and pension related services. Insurance business services and pension related services, where we had seen different lists and types of insurances, life insurance, general insurance, and all those. In that, there is a new entry added. Okay, there is a new entry added, that is entry number 36A. Entry number 36A. Above entry number 36A means earlier we had entry number 35 which was talking about general insurance, entry number 36 which was talking about life insurance. Yes. Now see what are they telling us here. Services by way of reinsurance of insurance schemes. Okay, reinsurance of insurance schemes specified in serial number 35, 36, 40, etc. Now, first of all, some reinsurance services are going to be totally exempted. This is what they are telling us. Okay, ma'am, what do you mean by reinsurance first of all? Okay, what do you mean by reinsurance? Okay, now let's say, for example, there is a person who goes to, let's say, any insurance company. Okay, let's say he goes to SBI. SBI also has its own insurance company. Yes, there is a person who goes to SBI and says that I want insurance of 50 crore rupees. SBI will be like, okay, 50 crore rupees. So SBI says that, okay, if you want insurance of 50 crore rupees, then in that case, you will have to pay a good premium. This person says that, okay, I am ready to pay that good premium. Okay. Now, imagine this person has the capacity to pay that premium. Okay, but if, let's take the example of life insurance. What if something happens to this person? What if something happens to this person? Then can I say SBI will be liable to pay that 50 crore to his legal hire, to his nominee, etc., whoever is there? So SBI says that, how can I take such a big risk? I cannot take such a big risk. So SBI takes the reinsurance. Okay, SBI takes the reinsurance from another company, from another insurance company. Let's say SBI goes to ICICI and tells to ICICI that I have a big customer available with me, but who wants to take insurance of 50 crore rupees. So now, can we say SBI plus ICICI both jointly together, they are going to insure this person? Yes. So can I say SBI has passed on some risk to ICICI also? This concept is called as what? This concept is called as reinsurance. Okay, this concept is called as reinsurance. Okay, now see, premium will be paid by whom to whom? Premium will be paid by this person to SBI, and SBI will also have to share some premium with ICICI. ICICI is also jointly taking the risk, na? So it should also get some amount of premium. All these things come under the concept of reinsurance. Are you able to understand this? Yes, so these services, can we say your reinsurance services are provided? Your reinsurance services are provided by ICICI, for which it is going to get some premium also. So this reinsurance services is going to be totally exempt. Yes, it is going to be totally exempted from GST. Yes, so whichever schemes you have studied above under general insurance, and whichever schemes you have studied above under life insurance, whatever name of yojana or whatever name of scheme is covered here, if you do a normal insurance, then also GST is exempted, and reinsurance under these schemes are also GST exempt. I hope you are understanding this. Yes, that is written here in entry number 36. Yes. Okay, I think we are good to go for the time being. Yes, okay. So all these were your major amendments in the exemption chapter. Manageable till here? Yes. Okay. Please expect some or the other question from exemption amendments. Huh? You can definitely expect any question from amendments part. Okay. Okay, so a few more amendments in exemptions. Let's complete it. We completed a couple of them. Please come to services provided by government, services provided by Ministry of Railways. Can you please come to that point again? Where we did about platform fees, waiting, cloakroom fees, etc. Can you just come to that point? Education, this we completed. Yes, this one. Yes, services provided by Ministry of Railways. We completed this Indian Railways point. We completed one zone to another services. This is also completed. Now, one small point one more addition was done here. That was entry number 9G. What is entry number 9G talking about? Now, let's say if there is a special purpose vehicle, okay, SPV, you must be knowing the concept of it. If there is a SPV which is providing certain services to Ministry of Railways, that is Indian Railways, okay, let's say for example, this special purpose vehicle, okay, this SPV has made some infrastructure, okay, it has made some infrastructure for the Indian Railways, and it is under that BOT system. BOT system means build, operate and transfer system, means where for the first few years SPV is going to build that infrastructure, then it is going to operate, means do the repairs etc. also, and then it is going to transfer the ownership to the Ministry of Railways. So suppose SPV has, let's say, laid down some railway lines etc., and now it is giving the use, it is giving it for use to the Ministry of Railways, for which the Ministry of Railways is paying certain consideration. Okay, maybe the special purpose vehicle is providing certain services to the Ministry of Railways, let's say railway track repair services or train cleaning services or something like that. If it is providing any such services to the Ministry of Railways, for which the Ministry of Railway is paying certain consideration, then in that case this particular service is going to be totally exempted from GST. Okay, this is going to be totally exempted from GST. Okay, so this was one more new entry, entry number 9G, that was added. Then after that, going on to the next one. Okay. Okay, immediately after that in your textbook, you have got this entry number 4. Okay, immediately after that in your textbook, you have got entry number 4. Can you come to entry number 4, everyone? Yes, in entry number 4, we had studied that if there is any governmental authority, do you recollect this? If there is any governmental authority which is providing any services, which services were we talking about? Any services provided by governmental authority, which was actually the responsibility of municipality or panchayat. Do you recollect? We had the meaning of this governmental authority and governmental entity, etc. also. Yes, so there is one small addition, there is one small circular basically there. So governmental authority was any such like development authority and all those type of authority, board, body, etc., where at least 90% of the participation is going to be of the government. Okay, so now in that governmental authority, they have put a circular that even RERA, okay, Real Estate Regulatory Authority, Real Estate Regulation and Development Act, this particular authority, okay, RERA is formed. RERA is formed under the RERA Act, right? So, and it is formed with a particular purpose. What is the purpose with which the RERA is formed? It is formed for regulating the real estate construction and all those things. It should not get delayed. The buyer should not get cheated and all those things. With that purpose, it was formed. So they are telling basically what is the meaning or what is the purpose of the circular is RERA is going to be included. Okay, RERA, this particular authority is going to be included in the term called as governmental authority. So whatever benefit goes to the governmental authority under entry number 4, that benefit will also get extended to RERA. So basically, if RERA is providing certain services, okay, and it is collecting certain charges, like RERA also collects statutory charges, statutory collection charges are collected by RERA. On that also GST is going to be totally exempt. Okay, question can be expected. Please be careful. Like I have already told you, on amendments specifically, questions are asked. Okay, so this is also done. Then after that, one more point I wanted to tell you. One second. Yes, come to educational institution again. Come back to educational institution again. In educational institution, I have added one more circular there. In educational institutions, in educational services, basically, I have added one more circular, which is talking about approved flying training courses. Approved flying training courses. Now, you must have heard about an authority called as DGCA, Directorate General of Civil Aviation for aircrafts and all those things. Yes. Now, DGCA is basically the authority. Okay. That if let's say, now there are many flying schools, etc., right, who teach how to fly an aircraft, how to fly a helicopter, etc. There are many such organizations. Okay, those organizations or those institutes are called as what? Those are called as flying training organizations. Okay, now listen, these flying training organizations should be approved by the DGCA. Okay, they should be approved by whom? They should be approved by the DGCA. So what is the role now here? Basically, DGCA gives approval to these flying training organizations. Okay, they tell to the flying training organizations that you can conduct a minimum these many hours of training should be given to a pilot, etc., etc. Okay, so and flying training organizations give the education. Okay, they provide the education to students. Okay, let's say I want to learn how to become a pilot, etc. So I will have to go and contact a flying training organization. Flying training organization, if it is providing me with a course which is approved by the DGCA. Okay, so DGCA will give the approval to the FTO and FTO is going to provide me the training. So if the course which I am taking, okay, I as a student, whatever course I am taking from the FTO, if that is approved by the DGCA, then this service is going to be totally exempted. Okay, see, for learning how to become a pilot, I will have to pay consideration to this FTO. On that, there will be no GST applicable. Okay, now see what is the condition for this. DGCA approves the flying training organization as well as also approves certain courses and mandates the requirement of course completion certificate. Means once I complete the course, I will also get a course completion certificate which will be issued to the successful candidates. Therefore, the approved flying training courses conducted by FTOs approved by the DGCA, wherein the DGCA mandates the requirement of a completion certificate, are exempt as services provided by educational institution for obtaining a qualification recognized by law. So basically, FTO is providing me such educational institution which is approved by a law. What is the law here? The law here is DGCA. So any services provided by FTO to its students, faculty and staff. Okay, any services provided means this is just considered as the educational institution which is providing any course which is recognized by law. So this is going to be totally accepted. Okay, provided the student who is successful in getting the training, if he has also got the completion. Yes, so FTO is basically treated at par with whom? FTO is basically treated at par with an educational institution which is recognized, which is providing any degree or courses which is recognized by law. Manageable till here? Okay, done. Okay, now this point is also completed. I think now we can go to the last amendment here, which is talking about the IGST exemptions. Please come to the IGST exemptions. Let's go there. At the end of the chapter, it is there. End of the chapter. Yes. Yes, here it is. One new point added. At the end of the chapter, you can remember that there were certain list of services given which were exempted only from IGST. Whatever we studied till here, that was there under both CGST as well as IGST. Now this point is applicable only for IGST, that is import, export, etc. So basically, if there is a foreign company, okay, if there is a foreign company and that to an airline company, okay, foreign airline company having an establishment here in India, foreign airline company, let's say Etihad, let's say Lufthansa Airlines, let's say British Airlines, etc. Any foreign airline company which is having an establishment here in India, and if it is importing certain services, see, establishment here in India means it becomes an Indian establishment of a foreign company, foreign airline company, if it is importing certain services from its related persons. Okay, from its related persons or from its distinct persons, that is from any of its establishment outside India, when it is made without consideration. Okay, now let's say for example British Airlines. Let's take the example of British Airlines. British Airlines India. Okay, it is there here in India and it is importing certain services from its related persons, from its related person or from its establishment outside India. Let's say its a related person means we can also call it as its head office, etc. Yes, so British Airlines, let's say UK, is providing the services to British Airlines India, and there is no consideration because they are treating that this is my entity only. So they are simply providing the services from outside India to India, and we are not paying any consideration for the same. Ideally, can we say it is import of services, but this has been specifically exempted under this particular notification. Yes, so provision is applicable only to airline company. Please make sure. Okay, please be careful with that. At least this much, please try to remember. Yes, I think we are done. Okay. So whatever, see, there were many additions, mostly in the form of circulars, and then there were certain entries, etc. also. I think there was only one amendment or two amendments, I should say. One was that NCVT and NCBET, that change happened. And second amendment, which I should be saying, is that entire entry number 69 got replaced. Okay, entire entry number 69 got replaced. These were the two amendments. Rest everything was addition. Okay, so please be careful with the amendment because definitely they can ask you questions from it. Yes. Okay. Okay, so let's take up the next amendment. Next, I have come to the chapter that is place of supply chapter amendment. Yes, in this place of supply chapter, basic first section, that was section number 10, where we were discussing about place of supply in case of goods, and that too domestic transactions, not import export transactions. In that section number 10(1)(ca). Okay, 10(1)(ca) already was a new section where we had studied that if an unregistered person goes to another state, okay, let's say a person from Maharashtra goes to a shop in Croma. I am an unregistered person. I am from Maharashtra. I go to Croma shop, let's say in Chennai, and I purchase something from there. Then what will be the place of supply? Right? What will be the place of supply? My actual place is Maharashtra, but I'm doing the purchases in the state of Chennai. So what will that Chroma store put in the invoice? Will it charge CGST, SGST, or will it charge IGST, etc.? That is the question. So the solution there was given under section number 10(1)(ca) that if my location, if that unregistered person's address is mentioned in the invoice, then that location will be considered as place of supply. And if my Maharashtra address is not recorded in the invoice, then the location of the supplier will become the place of supply. This we had studied. Now to that section itself, okay, to that section number 10(1)(ca) itself, they have added one more circular which was made applicable from June 2024, which I have put here in the amendment notes also. Don't worry, same thing, okay, same thing is put here in the amendment notes also. Now here they are telling that, let's say any e-commerce platform, okay, let's say we are buying something from Amazon, okay, let's say you people like you and me, etc., we are buying something from Amazon, okay, Amazon is doing the supply, Amazon is, let's say, doing the supply to any unregistered person, okay, to any small kid or like people like you and me, unregistered person, okay, and there in you must have seen in Amazon there are two options. One is something called as billing address, okay, that is generally permanent in my profile, and another one is something called as shipping address. Have you noticed something like this? Billing address and shipping address, etc. Have you noticed something like this? Yes. Now, can there be a possibility that billing address and shipping address, okay, billing address and shipping address are different? Can there be a possibility? Okay, when I created my profile, I was settled in Mumbai, but now I want to get some goods in, let's say, Rajasthan. So I'm putting the shipping address as Rajasthan, and Amazon does the delivery. So what will be the place of supply? That is the question here. What will be the place of supply? So what are they telling us here is, see, as per section 10(1)(ca), what did we just now study? As per section number 10(1)(ca), what did we study? Whatever address is recorded in the invoice. Okay, whatever address is recorded in the invoice, that address will be considered. But now, if you have seen Amazon's invoice, they write both the address. They write billing address also, and they write the delivery address or shipping address also. So now, and in that billing address and shipping address, if the states are different, okay, if the states are different, then in that case, what will be the place of supply? So see, what are they telling? Where the billing address and delivery address are different, the supplier may record the delivery address as the address of the recipient. So if there is a difference between billing address and if there is a difference between shipping address is nothing but your delivery address, then which address will be considered as the main one? The shipping address, the shipping where the goods are actually getting shipped, that place will be considered as the place of supply. I hope I am very, very clear with this, everyone. Yes? Okay. So what we studied in 10(1)(ca) is the address which is recorded in the invoice. I have written here. The address which is recorded in the invoice is relevant. But what if billing address as well as delivery address both are recorded? Then delivery address will be considered as the main address for the purpose of place of supply. I hope I am very, very clear till here, everyone. Yes? Okay. Done. Okay, so we had completed the first basic circular in case of place of supply. Let's go ahead to the another level of place of supply circulars and clarifications which they have inserted. It is very, very simple. Okay, but important again. Again, newly added circulars, amendments, from these we can definitely expect question in the exam. Let's start with the circular. It is simple. Okay, nothing to worry. Let's start with the same. So now this one circular, now this is talking about what? Okay, circular number 220, circular number 220/14/2024. This talks about clarification on place of supply of custodial services provided by banks. Service provider is the bank. To whom? To foreign portfolio investors, who want to do some investments here in India, and if they want to do some investments here in India, there is some Indian bank which is providing services to the FPI for which the FPI will be paying the consideration charges, etc. to the bank. Okay, now when we talk about this, can we say this foreign portfolio investor, this is a person who is situated outside India, right? And these banks are someone who is situated here in India. So can we say this also looks like export of services? First of all, goods is not at all involved. Yes, so can we say this is nothing but export? This looks like export of services. Now, when we talk about export of services is when both of them are situated outside India. Okay, I'll show you the heading of section number 13 in our textbook, just for your quick revision. Section number 13 is when any of the two, place of supply of services, where location of supplier or location of recipient is situated outside India. So can we say here the FPI is situated outside India? So we will fall under section number 13. Right, now in section number 13, we had one section called as section number 13 subsection 8, where we were talking about banking and financial services, where we discussed about the place of supply. So in case of banking and financial services, in case of section number 13, we had studied that place of supply will be the location of the supplier. Supplier is Indian bank. Okay, in our case, but there the services were supplied by bank or financial institution or NBFC to its account holder. Okay, means if the FPI, in our case, if the FPI is having an account with this particular bank, see, account holder is a different thing. Being an account holder is a different thing, and just giving professional services to any outside person, that is a different thing. So here what they have clarified is, in the given case where the banks are helping the FPI to maintain the securities purchased by the FPI with securities to purchase, it is more like advisory services and it is not an account holder kind of a services. So they are telling that the services which are provided by these banks to the FPI, they have clarified this by way of a circular, that these cannot be considered as services provided by a bank to its account holder. No. So if we do not fall here, that also means that section 13.8 is not applicable, right? So basically, see, if any outside person wants to, do some transaction in securities here in India, there will be many regulatory requirements also, government ka requirements, etc. will come into picture. So that is being helped. Okay, who is helping? The Indian banks are helping to the FPI, right? So in this case, they are telling that these are not considered as, are not to be treated as services provided to account holder. So if it does not fall under section number 13.8, then by default we are left only with one section, that is section number 13.2. That is where none of the sections apply. At that time, section number 13.2 is going to apply. Are you clear with this? So by default provision, section 13.8 not applicable and section number 13.2 will be applicable. I hope I am very, very clear with this. Okay. Then going on to the next one, next circular number 230/24/2024. This is also very, 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 very simple. Now this talks about place of supply of advertisement services provided to foreign clients. Okay. Now we'll understand this with the help of a diagram. This is very, very simple actually. Now let's say there is a foreign client. Okay, let's say there is a foreign client. Again, maybe something related to export of services, etc. There is a foreign client who is taking help of an advertisement agency which is located here in India. Okay, this foreign client, as the name suggests, this person is located outside India. Then there is an advertisement agency who is located here in India. Okay, who will provide the service to whom? Advertisement agency. Okay, advertisement agency is the service provider. It will provide the services to this foreign client. Foreign client is going to do the payment in foreign currency. Okay, payment is going to be done in foreign currency. Now, what type of services will be provided? Okay, now this foreign client wants to do some advertisement here in India. So can we say this advertisement agency will help the foreign client to connect to a media company here in India, maybe who is providing space for hoardings and all those things. Okay, now in this case, how the transaction has happened? Foreign client has relation only with this advertisement agency. Advertisement agency is promising to the foreign client, I will take care of everything, don't worry. But advertisement agency will have to further contact a media company, right? Maybe a newspaper company, maybe a hoarding company or something like that. So advertisement agency enters into a second contract with the Indian media owner company that I have a client who wishes to do advertisement. Please provide me the quotation for them. So can we say here there are two contracts? First contract is between the foreign client and the advertisement agency. See, there is no relation. There is no relation between foreign client and the media company. Okay, and the second client, second contract that is going to be there between the advertisement agency and the media. Are you clear with this? So now the question that arose here, was, first of all, will advertisement agency, will it be considered as an intermediary? Will it be considered as an intermediary? So answer is no. These are two different contracts, and that to principal contract. First is between the foreign client and the advertisement agency. Second is going to be between the, this is Indian. This is going to be between the advertisement agency and the media owner. So because there are two separate contracts and advertisement agency is not acting as an intermediary, it is acting as a principal. So the first issue which arose was, will advertisement agency be considered as an intermediary? So answer is no. Very, very logical. Yes. Okay, because there is no transaction between whom? There is no transaction between this media owner and the foreign client, right? That's why advertisement agency cannot be considered as an intermediary. That is one issue. Okay, second issue which came into picture here is, who will be considered in this case, in the first contract, who will be considered as the recipient? Service provider is the advertisement agency, right? Service recipient is the foreign client. Normal. This advertisement agency is a service provider, foreign client is a service recipient. And also, as per the definition of recipient, who is considered as a recipient? Whenever there is a consideration involved, can we say the person liable to pay consideration? The person liable to pay the consideration will be called as the recipient. In this case, who is liable to pay the consideration? The foreign client. This person is liable to pay the consideration, that too in foreign currency. So that person will be considered as the recipient and not the viewers of the advertisement. Let's say we view the advertisement of this foreign client. We will not be considered as the recipient. We are not liable to pay the consideration. So the person who will be liable to pay the consideration is the foreign client. Normal? Okay, and last issue which has come up here in picture here is whether the advertisement services provided by advertisement company to foreign client, that is the first contract, can it be considered as performance based services as per section number 13.3. Let's go to section number 13.3. 13.3 was talking about that goods, performance based services. So services which require physical presence of goods was covered here. In this advertisement, is there any physical presence of goods required on which the services are to be performed? No physical presence. So this one is not applicable at all. Okay. Next one. Services supplied in respect of goods. Not at all applicable. Okay. Then services supplied to an individual which require physical presence of the recipient. In our case, physical presence of recipient is the foreign client, right? So is the foreign client physically required here in India? No, not required. So can we say we are nowhere fitting in section number 13.3? If we are nowhere fitting in section number 13.3, then section 13.3 cannot be applicable. Now can you tell me, if section 13.3 is not applicable, then by default, because the recipient is located outside India, can we say this will be considered as export of services? Indian advertisement company is exporting the services, right? So in this case, what is going to happen? In this case, if no other sections are applicable, then section number 13.2 will be. Are you understanding this? Manageable till here? Very, very simple. Yes, see, if you break the transaction and if you try to understand it without applying too much about it, it will become very, very simple. Yes? Okay. Chalo, let's go to the next one. Everyone, let's give it a try. Okay, last amendment in your last circular, not amendment actually. We have not actually studied any amendment in this particular chapter. So the last circular of the chapter. Place of supply of data hosting services. Data hosting services provided by service providers who are located here in India. Let's say we are data hosting services provider and we are providing it to cloud computing service providers who are located outside India. Again, looks like export. Okay, so basically there is this data hosting service provider. Data hosting. Okay, we are hosting data. We are providing storage space. Okay, and we are providing all the technical infrastructure to some company which is outside India. We are the service provider. We are providing it to cloud computing service provider. Okay, we are data hosting. We are hosting the data. We are providing space, cloud storage, etc. To whom? To some foreign service providers. Okay, cloud computing service providers. Now see, what happens here basically is there is a foreign company. Okay, this recipient is a foreign company. We are Indian company. Okay, now let's say there is this foreign company who wants to provide some IT services here in India, and for that it needs to have some storage here in India. Okay, it needs to have some server here in India. Okay, technical servers, etc. here in India. So they contacted because they don't want to establish big things here in India. So they what do we say? They outsource the storage services to an Indian data hosting service provider. So we provide them this service. We provide them space. Let's say cloud space or something like that. We provide that service to them so that they are very mind free. They are very technically free, and for which they are going to pay us the consideration that is going to be in foreign currency. Okay, we do not provide the services directly to their clients. Okay, we are not providing the services to their clients. What are we providing? We are just providing that cloud storage services to this person. Okay, all these things are written here. Whatever I told you now, in short, all these things are written. So now the question that arises here is again, see, this they have given in form of a summary. Data hosting service provider, we, okay, Indian people. Can you see this India written here? Yes? Can you see this? Okay, we are the supplier. Okay, we are providing these services, data hosting services to cloud computing service provider, let's say in USA. So that person is situated outside India. Can we say we are not providing services to the end users? They are providing, but we are not providing. So our transaction is restricted to this only. Right? So now when we are providing these services, can we say one of us is situated outside India? If one of us is situated outside India, then can we say section 13 becomes applicable, export of services, right? And the payment is going to be in foreign exchange again. So we are fulfilling the conditions of our section number 13, export of services. So now this qualifies as what? This qualifies as export of services, right? Now, if it qualifies as export of services, now we need to understand which section in section number 13 will become applicable. So are we acting as an intermediary? Is your DHSP, data hosting service provider, are we acting as an intermediary? No. We are providing the service that we are providing to CCSP. This is on principal to principal basis. So intermediary services are not, because we are not at all connected to their clients. Right? So we are directly providing the data hosting services to that foreign company. So we are providing principal to principal services. So can we say this will not fall under that performance based services provided to intermediary, provided as intermediary, etc. Intermediary concept is not at all applicable. So can we say 13.3 or not 13.3, 13.8, sorry. Can you see this? Yes, intermediary services under section 13.8 applicable or not applicable? This is not at all applicable because there is no intermediary involved at all. Both the contracts are two different contracts, principal to principal contract. So can we say 13.8? Can we say section number 13.8 is not at all applicable? So if section number 13.8 is not applicable, then we are left only with one section, that is section number 13.2, that is the by default provision. Are you understanding this much? Yes. That is the clarification given here. Done. 13.2 will be applicable. Yes, I hope you are able to understand this, everyone. Yes, okay. Okay, so let's go to the next circular, next clarification, which belongs to the time of supply chapter, which has been newly added. So in time of supply, this circular which they have added, this pertains to services. Okay, this pertains to services. I will just show it to you. So this is the circular number 221/15/2024 dated 26th June 2024. This mainly talks about your projects relating to highway and all those things, construction of road, maintenance of roads and those things. Okay, very simple, very simple. Let's try to understand. First of all, this is considered as a service, right? If this is considered as a service, then in that case we will have to go to section number 13. Right, section number 12 was talking about time of supply in case of goods, and section number 13 is talking about time of supply of services. I hope you recollect this part. Yes, so section number 13.2 was talking about normal forward charge, time of supply of services under forward charge and all those things. Let's try to understand what is this. Now this is again a clarification, no new concept added here. Yes, there is no new concept added here. Let's try to understand. Now, clarification on time of supply in respect of supply of services. Services means we know section number 13 is applicable, of construction of road and maintenance. Means the service provider is going to provide two services. One is construction of road, plus after constructing to maintain the roads also thereof of the National Highway projects of NHAI in hybrid annuity model. Okay, now National Highway Authority of India, we know that is a government entity. Now it is going to give some contract. Okay, it is going to give some contract to a person to construct some roads and to maintain it also. Okay, now for this purpose, try to understand. Now hybrid annuity mode model of NHAI, under this model, the concessionaire means the person who got the contract has to construct the new road and provide operation and maintenance. Means his work is not only to do the construction, after doing the construction, road banane ke baad mein usko maintain bhi karna hai. Okay, of the same, which is generally over a period of 15 to 17 years, and payment of the same is spread over the years. So basically NHAI, this person is providing the service to the NHAI, right? This concessionaire is providing the service to the NHAI, and this is two type of service. One is the construction service also, plus another one is the maintenance service also, for which NHAI is going to pay the consideration to that concessionaire. Okay, now this consideration is not going to be a one-time consideration. This is going to be paid in installments over a period of number of years. Now they are asking, what will be the time of supply? What will be the time of supply in this circumstance? Okay, so first thing that they are making us understand here is, this is not only a construction service that once you construct the work is over. No, it is not only construction service. Here the concessionaire is responsible for two things. One is to construct the road first, and after that even to maintain it for some number of years. Okay, that they are trying to make us understand in the first two paragraphs. Okay, so now since the consideration is spread over installments, okay, since the consideration is spread over installments, maybe you can give the answer under continuous supply of services. Remember, we had this continuous supply of services coming up here in section number 31.5, that when should the invoice be issued in case of continuous supply of services. Okay, maybe you can give the answer, means it appears that it should come under that. Okay, so they have given us. A proper clarification. See what is the clarification here. This is the final one. It is clarified that the tax liability, that is the time of supply, on the concessionaire under the HAM contract, including the construction portion, would arise at, now it would arise as per section number 13.2. Okay, as per section number 13.2 means they are telling it will arise as per this. That is as if it is supply of service under forward charge. Okay, as if it is supply of service. Who is the service provider here? Who is the service? Can we say this concessionaire is the service provider? He is providing the service to NHAI. So he will raise the invoice on the NHAI, then NHAI will do the payment. And what was the provision? What was the provision as per section number 13.2? So if the invoice is issued on time, then the date of invoice or receipt of payment, whichever is earlier. And if the invoice is issued late, then the date of provision of service or receipt of payment, whichever is earlier. So that's what they have written here. If the, see here, it would arise, I will highlight it so that you can understand this. It would arise at the time of issue of invoice or receipt of payment, whichever is earlier, if the invoice is issued on or before the specified date. Okay, and if the invoice is not issued on or before the specified date or before the completion of the event specified in the contract, the tax liability would arise on the date of provision of the said service or receipt of payment, whichever is earlier. Okay, now here, if you are taking it as continuous supply of services, when should the invoice be issued? Can we say whatever is the date decided? Okay, whatever, let's say they would have decided that every 6 monthly we will raise us. So whenever that milestone event is completed, at that time the invoice should be issued. So if the invoice is issued on time, then the date of invoice or receipt of payment, whichever is earlier. If the invoice is not issued on time, then the date of provision of service. Okay, date of provision of service, that is whatever is the due date, final due date that you had already decided in the contract, or receipt of payment, whichever is earlier. Are you understanding this? Yes? Okay. So this is what they are trying to tell us here, that whenever there is this road construction contracts, etc., which is spread across many number of years. Okay, when it is spread across many number of years, then in such a case, your this thing, what will be the, how do we determine the time of supply? So it looks like it is continuous supply of service. So as per the provisions of continuous supply of service, as per section number 31.5, as you can see it here in your textbook, as per section number 31.5, your invoice, depending upon the due dates that were written in the contract, depending upon that the invoice should be issued. And if the invoice is issued on time, as per section 13.2, find out the time of supply. If the invoice is issued late, then again as per section number 13.2, find out the time of supply. Very simple. Yes, manageable everyone. Okay. Okay, so let's start with the next circular in the time of supply chapter. The first one that we did was for your HAM mode, that is the hybrid annuity mode in case of highways, etc. Another one is also a very simple circular. Okay, no new concept, no new amendment, just a circular. Let's try to understand this. Circular number 222/16/2024, dated 26 June 2024. So this is basically, this is talking about time of supply in case of spectrum usage and other similar services. Now you must have heard about spectrum fees. Okay, you must have studied in your direct taxes also. The government of India, okay, government of India, that is the Ministry of Telecommunication, etc., or Department of Telecommunication, etc. Government of India provides services. Okay, it does the allocation of spectrum. I hope you know the meaning of the term spectrum. Spectrum is just like in telecommunication, the meaning of the term spectrum is usage of the radio frequency through which we are able to connect through calls, internet, etc. So that resource is limited. So government allocates the spectrum to the telecom companies, for which the telecom companies are required to pay the consideration. Okay, so government of India provides these services to telecom companies, for which the telecom companies are required to pay certain consideration. Now this consideration can either be paid in one installment, okay, at once, or it can be paid in installments. Like it can be paid upfront, or it can be paid in installments. Okay, so can we say this is nothing but service provided by whom to whom? This is nothing but service provided by government of India to the telecom companies, for which the telecom company pays certain amount of consideration. Right now, can we say as per reverse charge mechanism? As per reverse charge mechanism, since government of India is providing this service, then this transaction will be taxable. Like on this particular consideration transaction, GST will be applicable, but it will be taxable under reverse charge mechanism, right? Because the services are provided by government, right? So that is okay. Okay, that is already written in the law, that there is nothing new. Now the question arises about the time of supply. Now what about the time of supply? So time of supply in this case, okay, time of supply in this case will depend upon the mode of payment. if the payment is done upfront, full payment is done by the telecom company to the government of India at once, then in that case GST will be payable when the payment is made or the payment is due, whichever is earlier. Let's say government of India says that you have to do the entire payment now itself. Okay, so whenever the whatever due date is given by the government or the actual date of payment, whichever is earlier, that will be the time of supply in case of upfront payment, right? Okay, then similarly, what if deferred payment? What if government says, okay, you can make, because the payment is not a small amount, so you can do the payment in installments. Okay, let's say for example, if government says like this, then in that case it will be considered as continuous supply of services, obviously, because it is going to last for more than 3 months. So it is going to be considered as continuous supply of service. And because your RCM will be applicable, so invoice will be issued by the recipient, that is by the telecom company to the government of India. And in case of continuous supply of service, if the due date is ascertainable, they would have fixed every year 1st January, every year 1st April, or whatever. So whatever is the due date that is decided for the payment, on or before that date, the invoice should be issued. Okay, that we have already studied in section number 31, that whatever will be the due date, on or before that date, the invoice should be issued, right? And whatever is the due date or whatever is the actual date of payment, whichever is earlier, that will become the time of supply. Are you understanding this? Yes. So basically, if you want, you can just highlight the important things here. If the payment is made upfront, okay, so GST will be payable when the payment is made, or whatever is the due date, whichever is earlier. Okay, if it is done in installments, then it will be considered as continuous supply of services. Yes, in that case, invoice will be issued by the recipient to the supplier as per section number 31. So whatever is the due date, on or before the due date, the invoice has to be issued. And now talking about the time of supply, when will the GST be payable? As in when the payment are due or payment is made, whichever is earlier. Yes, manageable, simple circular. Okay, so again, if you want, I'll just write it here. Upfront payment, whenever the payment is due or whenever the amount is paid, whichever is earlier, that will become the time of supply. Right, and if it is done in installments, so whenever the invoice is issued, first of all, when is the invoice required to be issued? Invoice should be issued on or before the due date that is ascertained for the payment, and then whenever the amount is due or whenever the amount is paid, whichever is earlier, that will become your time of supply. Manageable till here? Yes. Okay. So these were the two circulars that they had inserted in your time of supply. One was your National Highway Authority of India, the first circular, and second one is of the spectrums. Manageable? Okay. Okay, so let's go ahead with the further set of circulars. Okay, no major amendment is there. Only few circulars, clarifications are there in value of supply. Let's try to understand that. Okay, so now I don't know if you recollect and if you have recently done the lectures, etc. Then we had already studied this circular number 199/11/2023, dated 17th July 2023. This was an old edition which they had done for internally generated services. If you have taken the video lectures, then obviously it is there as amendments in your lectures. So where HO was providing certain services to its branch offices, or new addition that has been done in that is, if foreign affiliate, foreign HO, etc. is providing certain services to the related domestic entity here in India, then it is a supply, but how the valuation is going to be done, that we need to understand. From this, I have divided this into 3 issues. Okay, first issue we had already covered. Second issue we had already covered. This is not new. This we have already covered in our lectures. Okay, earlier. Now the third issue which they have simply added here is, now let's say we are situated here in India. Okay, we are a related person of a foreign affiliate. Okay, there is a foreign affiliate. I'm just writing it here. There is a foreign affiliate, means the person who is situated outside India. That person is providing services Okay, that person is providing services to its registered person, to its related registered person here in India. Now, okay, now in this case, can we say it becomes import of services for us, for an affiliate providing such services to its related entity here in India? This becomes import of services. So now, if this becomes import of services, then can we say your tax will be required to be paid by this person, that is by the registered person under reverse charge mechanism, right? So this person will also have to issue the invoice also. Okay, because here initially the transaction that will be done. Okay, if the foreign affiliate is charging some amount from its related registered person here in India, it will issue invoice only of the basic amount. Okay, but now for the purpose of GST under reverse charge mechanism, can we say the recipient will also have to issue the tax invoice to the foreign affiliate? Okay, so we will issue the invoice, we will pay the tax to the government here in India, and we can take the ITC of the same also if we are not restricted for as per the provisions of section 16, 17, 18, etc. So now we know that this particular transaction is between related person. This will be considered as a supply. Okay, now if this is considered as a supply, then what will be the value of supply? That is the question. Okay, now what we had done initially, that was nowhere talking about Indian affiliate, foreign affiliate, etc. So we assumed HO and BO both are situated here in India. Now the third clarification purpose of putting the circular is, what if one of the person, what if the supplier is situated outside India and we are situated here in India? Then we know that reverse charge mechanism, we now know that reverse charge mechanism will be applicable. Tax is required to be paid. Okay, but what will be the value? What will be the value? So they are telling that if we are issuing an invoice, okay, if we are issuing an invoice, the domestic entity, domestic entity is required to issue an invoice. If it is issuing an invoice, then whatever is the value, okay, because there is no problem, na, whatever is the value which is written in the invoice, okay, that will be deemed as open market value. If I am writing, okay, if I am writing value of the invoice as 1 lakh rupee, so 1 lakh rupee will be considered as value. Please pay tax on this 1 lakh, and you can take the ITC of the same also, subject to the ITC chapter restrictions. Okay. Acha, what if there is no invoice? What if we do not issue any invoice? Because they are telling that, okay, it is a related person, we don't want to charge anything from our domestic entity, etc. If there is no invoice issued, then in that case, value will be considered as 0, and that will be deemed as the open market value. Are you understanding this? Okay, so in this case, if the value is 0, no need to pay the tax, and then you won't even get the ITC also of the same. But if you have declared some amount in the invoice as value, that amount will be considered as that will be deemed as the open market value. We don't have to go and take the actual market value. Okay, whatever is written in the invoice, this is important. Huh? Whatever value is written in the invoice, that will be considered as a final value. If no invoice, then value will be considered as. Are you understanding this? Yes, simple. Okay. So this was one of the additional circular which they added to the last year's circular. Okay, the new addition that was done, that is done through this circular number 210/4/2020. Manageable till here. Yes. Okay, so first one is this. Yes. Okay. Okay, next thing that we need to do here is circular number 212. Circular number 212/6/2024. This also came recently only, 26 June 2024. So now this pertains to your section number 15, basic value of supply. It pertains to section number 15 3B2. Now, do you recollect? Whenever in case of discounts, okay, in case of discounts, try to recollect, okay, in case of discounts, let's say supplier is giving any sort of discounts to the recipient, okay, and if those conditions get fulfilled, then discount can be reduced from the value. Remember, if it was already agreed, it was mentioned in the agreement, recipient reverses the proportionate ITC, etc. Do you recollect that? Yes. So if supplier has already done the billing to the recipient, okay, and then later, if all the conditions of section 15 gets fulfilled, then supplier can give discount to the recipient. If supplier gives discount to the recipient, can we say can we say in that case, the value will decrease now? If the value of that supply decreases, then can we say even proportionately the GST amount also reduces? Okay. So in that case, the recipient would have already taken the old ITC, more amount of ITC. But now the recipient, because the value of supply has reduced, can we say it will have to reverse the proportionate ITC? I hope you recollect this much. Basic section number 15, discount adjustment. Yes. So now they have added a compliance point in that. Now see, can we say we are actually trusting, we have to actually trust on the buyer, on the recipient, that he reverses the proportionate ITC, right? So now for that, what have they provided here is, see, presently in cases where the amount of tax, okay, only the amount of tax involved in the discount given by the supplier to the recipient through tax credit notes in a financial year does not exceed 5 lakh rupees. Okay, now because of discount, if the value of tax, which is now getting reduced, okay, value of tax, if it is up to rupees 5 lakh per annum, okay, then what is the condition that they are adding here is, what they are telling here is, supplier will have to take an undertaking, or it will have to obtain a certificate from whom? Who is required to reverse the proportionate ITC? Recipient will require to reverse the ITC, then only supplier's tax liability will get reduced. Okay, so supplier will have to take a certificate from the recipient that he has done the reversal of ITC. Okay, so supplier will take a certificate from the recipient that you have reversed the proportionate ITC, you have reversed, so my tax liability can get reduced now. Okay, so we are basically relying on the certificate that will be issued by the recipient that he has done everything properly as per section number 15. Okay, this is applicable when? This is applicable when the value of tax amount that is required to be reversed. Value of tax that is there at the time of discount. Okay, if that is up to rupees 5 lakh per annum, then this adjustment will apply. And if the value of tax, okay, not the value of discount. See, discount can be, let's say, 1 lakh rupee. Okay, on that, how much amount of tax is to be reversed? That is this 5 lakh. Okay, so value of tax, if it exceeds rupees 5 lakh per annum. Okay, value of tax, if it exceeds rupees 5 lakh per annum, then in that case, supplier, supplier will take a certificate. Supplier needs to procure a certificate from the recipient, but that is not a self certificate given by the recipient. That certificate has to be issued by a chartered accountant or a cost accountant. Okay, chartered accountant or a cost accountant. So because here the amount of tax that is required to be reversed is more, so we are not relying on the self certificate that is given by the recipient. The recipient will have to obtain a certificate from a CA or a CMA that recipient has done the proportionate reversal of ITC at his hand for that particular credit note. Are you understanding this? Okay, now this is, can we say, till now also we are just engaged into manual work only. Okay, we are engaged into manual work only, certificates and all those things. So GST department is telling that slowly and steadily we will bring this facility online. Okay, slowly and steadily we'll bring this cross-check facility on the GST portal. But till the time they bring it, till that time, this is the, what do we say, this is the treatment, or this is the procedure that we are required to follow. Manageable till here? Yes. So in case of discount, if the value of tax, okay, the discount which is given by the supplier to the recipient, okay, if supplier wants to give a discount to the recipient, then supplier will have to issue the tax credit note in a particular financial year. If in that the value of tax does not exceed 5 lakh, recipient will give a self certificate that he has reversed the proportionate ITC. If the value of tax is more than rupees 5 lakh per annum, big amount, big reversals to be done, etc., government has risk of its tax loss, etc. So in that case, the recipient will take a certificate from its CA or a CMA, and then it will issue it to the supplier. Manageable? Yes, that is given here. Okay. Chalo, can we go ahead now? Yes, let's go ahead. Chalo, going on to the next circular. Very, very simple. Okay, let's go to the next circular. Circular number 218 oblique 12 oblique 2024. Okay, let's go to the next one, next circular. Very, very simple, very, very logical. Again, circular number 218 oblique 12 oblique 2024, GST dated 26th June 2024. Okay, so now here they are talking about providing of loan. Okay, providing of loan. Loan is provided either by an overseas entity. Okay, overseas entity is providing loan to its Indian affiliate. Okay, loan transaction is happening here to its Indian affiliate or any person in India. Okay, any person who is there in India, it is providing this loan to its related person here in India. So basically the transaction is taking place between related person, and they are telling us, or they are asking us is when there is no consideration that is charged in nature of any processing fees, admin charges, loan granting charges, etc. See, whenever we go and take a loan from a bank, etc., at that time, bank charges certain processing fees. See, one thing the bank is going to charge from us is the interest, but interest is exempt. Already studied in the, we are going to study, or you have already studied in the exemption chapter, right? But now I'm talking about the processing fees. Okay, processing fees or the loan granting fees or the administrative fees, etc., which is charged by the banks, etc., that is taxable. On that, GST is applicable. So now here the question that they are asking here is, what if, forget about bank, what if my own overseas entity is providing me the loan? Or if what if my own related person is providing me the loan for which they are not charging any consideration? They are telling that we are related only, na? So we will not charge any consideration in the form of that processing fee. Interest they will take. On interest, there is no GST. Either you have already studied or you will study. Okay. But if they are not charging any loan processing fees, any documentation fees, etc., then what will be the taxable supply of service? So the answer here is very, very clear. The answer here is very, very clear. No need to jump to rule number 28 first of all. Why? Why there is no need to jump to rule number 28? Because there is no question for levy of GST where there is no consideration charged, right? No need to jump to rule number 28. That is one thing. And secondly, normal, as per our section number 7, can we say it cannot be said that any supply of service is being provided because there is no consideration. Okay, because there is no consideration involved. So if overseas entity is not charging anything from the Indian affiliate or related person is not charging any consideration from that person here in India, then they are telling that there will be no GST applicable. Yeah, yes, if there is no consideration involved, if there is no consideration involved for processing fees, etc., then there will be no GST applicable. Okay, but what if this overseas lender or the related person here in India, what if they say no, we will work like bank, we will work professionally, and what if we want to charge some consideration? If you want to charge some consideration, no problem. Whatever amount of consideration you are actually charging, that will be considered as value of supply. So if basically conclusion, small conclusion, if there is no consideration that is charged in the form of processing fees, etc., then there will be no GST applicable. If yes, consideration, if they have charged some consideration for that processing fees, etc., then yes, GST, whatever actual consideration they have charged, on that the GST will be applicable. Are you clear with this? Manageable till here? ठीक है, done. Okay, then let's go to the next one. Yes, let's go to the next one. Circular number 225 oblique 19 oblique 2024 dated 11th July 2024. Okay, now if you recollect, already in value of supply, okay, already in value of supply chapter, we had done some circular last time. Okay, I think it was dated 26th October 2023 or 27th October 2023. Yes. Okay, let's discuss about that. So in that circular, okay, last time in that circular, in your lectures we have already covered, we had discussed something about personal guarantee given by the directors of the company to the company, and then we had discussed about some corporate guarantees. Okay, now whatever we studied about personal guarantee, okay, whatever we studied about personal guarantee, that remains as it is. Remember, we had studied that in case of personal guarantee, the directors cannot charge any consideration. If they cannot charge any consideration, there will be no GST applicable. This is what we had already studied. And for corporate guarantees, they had inserted rule number 28(2), okay, where they had told that the value of supply is equal to 1% of the amount guaranteed, or rupee or actual consideration, whichever is higher. Okay, this is something which we had already studied. Now, by way of this circular, they have done some retrospective amendment. Okay, by way of this circular, they have done some retrospective amendment. Now, whatever guarantees, now I'm not talking about personal guarantee, I'm just talking about corporate guarantees. Whatever that point, this 1% of the guarantee or actual consideration, whichever is higher, this was inserted from 20 year. This was inserted from 26th October 2023. Whatever corporate guarantees were issued before that, we did as per rule number 28, normal, as per rule number 28. But if there are any corporate guarantees which are issued or renewed after 26 October 2023, then we had already studied rule number 28(2). Okay, we had already studied rule number 28(2). Ma'am, what was rule number 28(2)? Rule number 28(2) was 1% of the amount guaranteed. Okay, not the loan given. Whatever is the, see, guarantee is, let's say, corporate guarantee we are talking, let's say holding company is giving guarantee in respect of its subsidiary company to a bank. Okay, so this is done between distinct persons, related persons, etc. So whatever is the amount of guarantee multiplied by 1% or actual consideration, whichever is higher, this we had already studied in rule number 28(2). Okay, so this is nothing new. Now what, ma'am, for what purpose are we studying this particular circular? Let's try to understand. Okay, till here basically everything was old. Okay, everything pertained to the old thing. Now ma'am, what is the amendment which is done in rule number 28(2)? Can you please explain that? So what they are telling here is the extra term which is inserted here is this. Okay, so now if there is, see, this giving of corporate guarantees, etc., is a supply of service. Okay, if there is a particular holding company, let's say, okay, if there is a holding company which is giving guarantee to a bank or a financial institution on behalf of whom? On behalf of a related, let's say, subsidiary company, related person. Let's take the example of subsidiary company. So basically, who is standing as a guarantor? Holding company is standing as a guarantor for its subsidiary company, and it is telling to the banks or financial institution that if my subsidiary does not repay the loan, I am standing as a guarantor. Okay. Now in this case, what will be the value of supply? So value of supply will be same, rule 28(2). Okay, what did we study in rule number 28(2)? 1% of the amount guaranteed or actual consideration, whichever is higher. The extra word added now here is this per annum. Okay, amount guaranteed per annum for every year, because the loan tenure is going to be big. So guarantee is renewed, na? It depends on the bank. Some guarantees are renewed every year. Some are fixed for a 5-year term period. Sometimes there are multiple guarantors also. So for that they have issued the clarification. So one word added here is this per annum. Okay, this is the retrospective amendment which is done. This amendment was done on 10th July, but with effect from 26th October. So basically, from whenever this rule number 28(2) came into picture, from that time this is retrospectively applicable. Okay, so now in this case, what are the options? Okay, what are the options? These three things are there. Okay, now let's say if it is a fixed term guarantee, let's say the guarantor says that I am going to give a guarantee for a period of, let's say, 5 years. So they are telling that whatever you are calculating, okay, this 1%, let's say he says that guarantee amount is equal to 1 crore rupees. Okay, guarantee amount is equal to 1 crore rupees. So in that case, 1%, be careful, 1% of 1 crore multiplied by number of years. Multiplied by number of years is, let's say, 5 years. Or whatever is the actual consideration that the holding company has charged from the related company for giving this guarantee. See, giving guarantee also has a lot of risk, na? What if my subsidiary does not repay the loan? So whatever is the actual consideration that we are charging from the subsidiary company, that amount out of these two, whichever is high. Okay, so this makes a lot of difference. This makes a lot of difference. It is not 1% of 1 crore. 1 crore is the amount that I have guaranteed for every year now. So that amount. And GST will be payable whenever you have issued the guarantee today itself, not at the end of 5 years. Okay, GST will be payable at the time of issuance of this. Okay, so this per year, number of years, this makes a huge difference. Another one, ma'am, what if the guarantee is provided for less than 1 year? If it is 1 year, 2 year, 3 year, 3.5 year, then you can do proportionate. You can multiply. Ma'am, what if it is for half year? No problem. Multiplied by those many number of months. Right? Let's say it is for 6 months. So instead of 1 year, it will be 0.5. Okay, or it will be 6 by 12. That. Are you clear with this? And last, what if it is a 1 year guarantee with renewal? Means as of now, I am giving a guarantee for 1 year and then I will keep on renewing it depending upon the circumstances. So as of now, for first year, it will be 1% or actual consideration, whichever is higher. Next year, again do the calculation, again pay the GST. Are you understanding this? Okay, so they have made it, they have done a amendment, good amendment. Are you understanding this? Yes? Oh. Now, so basically whatever we studied, that we studied in rule number 28.2. Okay, whatever we studied in rule number 28.2, and in that they have put one exception. Okay, now whenever there is a corporate guarantee given, this is the provision that is applicable. Okay. Now the question here is they have given a good exception. Now let's say in case of supply of service of corporate guarantee, which is provided between related persons. Okay, which is provided between related person, where one person is providing this corporate guarantee services to another person, holding company, subsidiary company, etc. And full ITC is available to the recipient. Okay, if full ITC is available to the recipient, what they are telling, no need to do this calculation of 1%, etc. The value declared in the invoice will be deemed to be the value of supply. Okay, because if this person is the supplier, okay, let's say if this person is the supplier, he is issuing the invoice also. And if recipient is available for full ITC, he is not covered under any restriction, etc. Then whatever is the value that this person is declaring, on that he will pay the tax, and this person can take the ITC. So they say no need to do those calculations, etc. Yes, so this is an exception that they have inserted. Basically, this will be available when full ITC is available to the recipient. Okay, if full ITC is not available or by default provisions as per rule number 28.2, then that will. Yes, so one amendment that we studied is that per annum thing. Second thing that we studied was this exception, right? And third amendment which they have done by way of this circular is, suppose if corporate guarantee is between related person and the recipient is situated outside India. Okay, the guarantor service provider is here in India. Service recipient, the person for whom we are standing as a guarantor, that person is situated outside India. Here also they have done this amendment. They are telling that this sub rule will not apply. That is this 28.2 etc. will not apply when this recipient is situated outside India. At that time we don't want to do all these things. Okay, because these provisions are not applicable to export of services. Can we say we are exporting the services? So at that time these provisions will. Are you clear with this? So these three things we have studied, and then they have given us some example, that 5 year. Okay, 5 year example. So multiplied by 5 years. So they are directly writing it as 5%. Or it can be amount guaranteed multiplied by 1% multiplied by 5 years. It will remain the same. Okay, that is one example. And what if there are two co-guarantors? What if there are two service providers? Then in whatever ratio they have provided the service. Let's say they have provided the service in the ratio of 60% and 40%, etc. So whatever is the amount, total amount guaranteed multiplied by their share. Let's say total amount guaranteed is equal to 1 crore. Out of that 60% is provided by A company, 40% is provided by B company. So 1 crore for A. 1 crore multiplied by 60%. 1 crore multiplied by 60% multiplied by number of years. Okay. Or yes, number of years per annum. Right. And or actual consideration, whichever is high. That way. So nothing is getting doubled. We are just dividing it between the two co-guarantors. Are you clear with this? Manageable? Yes. So to conclude, okay, to conclude, basically for all the corporate guarantees, okay, for all the corporate guarantees, rule number 28.2 will apply. Okay, ma'am, what does rule number 28.2 say? 28.2 says that 1% of not loan amount, please be careful, 1% of amount guaranteed per annum, careful, okay, or actual consideration, whichever is high. Okay, in this, so per annum thing we have already understood, and in this they have put an exception that if the recipient, okay, if the recipient is eligible for full ITC, if recipient is eligible for full ITC, then whatever is the actual value of invoice given by the supplier to the recipient, that will be considered as value. Then you need not do this 1%. Manageable? Yes. And yes, one more. What if the recipient is situated outside India? Then this entire rule will not. Yes. Manageable till here, everyone? Okay. Done. Okay. So these were basically the additions that are done in your value of supply chapter. Yes. Please do expect questions from here. Yes. Even if you do it once, ek bar bhi kar liya na, so sorted. Okay. It will be sorted. Okay. Okay, let's start with the amendments of the next chapter, your big chapter, that is input tax credit. Yes, we'll do it one by one. Okay, first come to section number 16.4. Come to section number 16, subsection 4, we will take up the amendment relating to that. 16.4 was talking about the time limit for availing the ITC. Time limit for availing the ITC. That November, 30th November, that point. Please come to that point, everyone. Yes. I hope you are there with section number 16.4 in your textbook, everyone. Yes. So in section number 16.4, what we had studied is, was whenever we are purchasing something, subject to section number 16, 17, etc., we are allowed to avail the ITC. If all the conditions are fulfilled, we can avail the ITC, and the time limit for availing the ITC is 30th November of the next financial year, or filing the annual return, whichever is earlier. Okay, the date of filing of the relevant year's annual return, whichever is earlier. I hope you can recollect. We had certain examples, etc., also on the same. Now in that, there is a circular that is added. Okay, same circular dated 26th June 2024, that is being added there. Let's try to understand what is that circular. Basically, this circular is applicable for RCM cases. Okay, reverse charge mechanism cases. Now, in RCM, I hope you can recollect. Let's say if there is an unregistered supplier. Okay, there is a person who is supplying some this thing, and that person is supplying to a registered person, and that transaction is covered under RCM. Yes, that transaction will come under reverse charge mechanism. That is, the supplier is not required. The supplier is not required to collect any GST because he is unregistered, but the registered recipient is required to pay the GST on the same. After paying the GST on the same, it can take the ITC of the same. Okay, now, but for taking the ITC, can we say invoice is required? Yes, again I will repeat, this registered recipient will pay the GST. After paying the GST, it will take the ITC on the same, and then, but whenever we are taking the ITC, we need the invoice. So your proper tax invoice will be issued by whom to whom? Proper tax invoice. Proper tax invoice can be issued only by a registered person, right? So what will be the time limit? What will be the time limit for this registered recipient to avail the ITC? The time limit will depend upon issuing of this invoice. Okay, normally it depends on the invoice which is issued by the supplier. If everything is normal, who will issue the invoice to whom? Supplier will issue the invoice to the recipient, but this is the case of RCM. So tax invoice can be issued only by the, in this case, tax invoice can be issued only by the registered recipient to the unregistered supplier. So whenever this invoice is issued, depending upon that, section 16(4) will apply. Okay, if this invoice was issued on time, okay, if this invoice was issued on time and the tax was paid to the government on time, etc., then 16(4) will apply. That is the year in which the invoice is issued by the recipient. Again, I'll repeat, the year in which the invoice is issued by the registered recipient succeeding year's 30th November or the date of filing the annual return, whichever is earlier, that will be the time limit for availing the IDT. Achha, what if this person issues the invoice late? What if the recipient issues the invoice late? If this is the case of RCM now, and we have already studied in time of supply chapter, as per section number 31, there is a time limit for issuing the invoice. What if the invoice is issued late? Then in that case, this recipient will be liable to pay the tax. Still, it will be liable to pay the tax, plus it will have to pay the interest also on that late payment of tax. Are you understanding? So see, what are they telling us here? It is clarified that in case supplies are received from unregistered suppliers, where tax has to be paid by the recipient under reverse charge mechanism, and where invoice is to be issued by the recipient, okay, the relevant financial year for calculation of time limit of ITC will be the financial year in which the invoice has been issued by the recipient. Okay, now in section number 16(4), what did they say? What did they say? 30th November of the succeeding financial year. Which financial year? That financial year in which the invoice is issued. Okay, that financial year in which the invoice is issued. Invoice is issued by whom? In case of forward charge mechanism, it is issued by the supplier. But in case of reverse charge mechanism, it is issued by the recipient. Are you clear with this? And if the recipient issues the invoice late, then he will be required to pay the interest. Okay, plus because he is delaying the issue of invoice, he will be liable to some penal action under section 122 also. Are you understanding? So 16(4) is basically applicable. 16(4) is basically applicable to FCM also, and 16(4) is applicable to RCM also. In FCM, invoice will be issued by the supplier. Okay, and in RCM, invoice will be issued by the recipient. Are you clear with this? Yes. So that was one of the circular. That is relevant for section number 16(4). I hope this much is manageable. Okay, one amendment done. Okay, one amendment of ITC is done pertaining to section number 16(4). Yes. Okay. Now, directly come to section number 17(5), that blocked credits. Come to section number 17(5). Yes. And in 17(5) also, come to 17(5)(d), the fourth point, self-construction of immovable property. You can see it on the board. I have taken the notes. I have taken out the notes. 17(5)(d), self-construction of immovable property. Please come to that. In fact, it can be related to 17(5)(c) also and 17(5)(d) also. 17(5)(c), the just above point, the third point in section 17(5), which was talking about works contract services for construction of immovable property. Do you recollect this? Whenever we were constructing any immovable property, and if we have taken works contract service, except for the builder, developers, etc., then in that case, ITC will not be available when the expenses are capitalized in the books of accounts. Do you recollect something like that? And that was related to immovable property. And then in that we had studied the meaning of immovable property, and there were certain exceptions, etc., coming up in that. Yes. And we had come up with a conclusion. I don't know if you recollect or not. in that we had come up with a term called as plant and machinery. Yes, plant and machinery was allowed as an exception. Do you recollect this? Any works contract services that we have taken for construction of plant and machinery, that was allowed as exception, and in that any apparatus, any equipment, any machinery which was affixed to the earth, okay, by foundation or structural supports, etc., that was allowed. Okay, this part was allowed, but land, building, telecommunication tower, pipeline laid outside factory premises, this was excluded. So this was blocked. Do you recollect something like this? Yes, so normal plant and machinery allowed, okay, but land, buildings, civil structures, telecommunication towers and pipelines which are laid outside the factory premises, these were totally blocked. This is what we had studied. So now we have got a clarification. And similarly, in the C clause, we were availing works contract services. In the D1, we are doing self-construction of that immovable property. Everything remained the same. The allowability and blocked thing, everything remained the same. Now, for these two clauses, for clause C and clause D, there was a clarification that was added. Now, here they are telling very simple clarification. They are asking, what about the ITC? What about the ITC on ducts and manholes? Okay, on ducts and manholes, which is used in network of optical fiber cables in terms of section number 17.5. Okay, now whenever the companies are providing telecommunication services, okay, whenever the companies are providing telecommunication services, and when they are laying this optical fiber cables, okay, cables, etc., when they are laying in the ground, etc., for providing you the telecommunication services, at that time they need to make some ducts and they need to make some manholes. These are basic necessity as per their business requirement. Okay, so now when ducts and manholes, okay, when these ducts and manholes are made, now the question arises, see, whenever we are making any telecommunication tower, as per these words, everyone here, whenever we are constructing any telecommunication tower, that was excluded from plant and machinery. Okay, excluded from plant and machinery means it was totally blocked. Now they are not telling that they are constructing a telecommunication tower. They are going to provide telecommunication services only. But they are making some ducts, or they are making use of some ducts or manholes. Okay, if they are making use of some ducts and manholes, now they are asking, what about its ITC? Okay, what about the ITC on the same? So see, what are they telling us here? Moreover, ducts and manholes used in network in this optical fiber cables have not been specifically excluded from plant and machinery. Plant and machinery included everything, but except for these things. And ducts and manholes are not excluded. So can we say simple language, ducts and manholes will be considered as plant and machinery? If it will be considered as plant and machinery, then can we say ITC on the same is going to be allowed and it will not be restricted? Okay, had it been telecommunication tower, then blocked. Okay, had it been factory pipelines, the pipelines outside the factory premises, blocked. Okay, but ducts and manholes, these are not specifically excluded. So that will be considered as plant and machinery, and therefore ITC on the same is going to be. Are you clear till here? Yes, that was one of the clarification. If you see, nothing new is added. They have just done the clarification. Okay, there will be very few places where they have added something new. Okay, now let's go to the next one, everyone. Circular number 195/723, read with this new circular. Okay. Do you recollect when we were doing the amendments of supply under GST? Supply under GST, there was a circular relating to free warranty, repairs and replacement. Do you recollect there was a circular relating to that? Yes. So now, relating to that circular itself, we have got certain points under input tax credit. Okay, relating to that circular, we have got certain points under input tax credit. Let's try to understand the same. Okay. Now here, everyone, just try to understand. Now, when we were doing this ITC chapter, etc., do you recollect before starting the section number 17, before starting this blocked credits, we had seen that uh, if we are doing, yes, when we started with the section number 17, at that time we studied that if a taxable person is making taxable supply and if he is making exempt supply, okay, on taxable supply, he is going to pay the GST. So he will also get the ITC of the same on his purchases. Okay, but when this person is doing an exempt supply, okay, if I am doing some supply on which GST is exempted, on which GST is not applicable, etc., then whatever I have purchased, I will not get the credit of the same. Do you recollect that? Yes, this we had done in section number 70. So now here the question arises is, let's say if the original equipment manufacturer, just try to understand one case, you will able to relate it to the other cases also. Okay, let's say original equipment manufacturer has sold some goods to the customer. Okay, he has sold some goods to the customer, and along with the goods, it has also given some free warranty of 1 year on the goods. Can we say customer would have paid some amount to the original equipment manufacturer? Yes. Okay. Now, let's say something happens to that goods. Okay, let's say something happens to the goods within a time period of 1 year itself. Something happens to the goods within a time period of 1 year itself. Then can we say customer will be able to get the free warranty services from the original equipment manufacturer? Free warranty services. Yes, free replacement of goods, etc. Yes. Now, for that, OEM is not charging anything from the customer because he is giving free warranty. If he is not charging, we have already studied in supply under GST chapter that it is going to be totally free of GST also, that there will be no GST applicable. Yes, why? Why? Because it was written under the contract that the OEM is going to give the free warranty. So now my question that has arisen here is, OEM has given the goods for which consideration was charged from the customer. OEM has also given free 1 year warranty, for which also there is a hidden consideration, in the goods itself, right? Now let's say if OEM has charged 45,000 rupees for that AC, means 45,000 is for the goods also and 45,000 is for the warranty also, even if they may call it as a advertisement tactic. ठीक है, एडवर्टीजमेंट के लिए उन लोग खाली इतना बोल सकते हैं that it is free, just for the purpose of marketing purpose, OEM will say that it is free warranty, but actually it is not free, we have paid for it, right? So this warranty which OEM is giving it to the customer for free, this is not actually free. Okay, so this cannot be considered as exempt supply. Okay, this cannot be considered as what? This can never be considered as, they try to fool you. Okay, this cannot be considered as an exempt supply. So now the next question that arises is the OEM required to reverse any ITC? Can we say the supply done by the OEM to customer is a taxable supply? It is not an exempt supply. So whatever purchases the OEM has done, or whatever inputs or whatever ITC the OEM has paid, that is not required to be reversed. Why? Because the supply which is further done by the OEM to the customer is not an exempt supply, it is a taxable supply. So no reversal of ITC is required. Okay, no reversal of ITC is required, right? Because the supply which is done by the OEM to the customer, even if it looks free, but it is not actually free, right? Similarly, when a distributor provides replacement of parts to the customer, on whose behalf? On behalf of the manufacturer. So now the question arises, will the distributor be required to reverse it for the the ITC? Okay, so now here, just try to understand. What if distributor gives it to the customer for free? Okay, what if distributor gives it to the customer for free and later the distributor gets it reimbursed from the manufacturer? Then can we say anyway here there was a consideration involved? If there was a consideration involved, then there was a GST also involved. So is it an exempt supply or is it a taxable supply? It is a taxable supply. If it is a taxable supply, then question of reversal of ITC will never come into picture. Yes, that is the first case. Okay, next case. Let's say, distributor gave it to the customer. Okay, this B case I am talking about. Distributor gave it to the customer for free. Okay, they say it as free, but ultimately we have charged the consideration. Okay, and then after that, manufacturer gives that part. Okay, manufacturer also gives that part to the distributor for free. Manufacturer replaces that part to the distributor for free, and distributor does it for the customer. Okay, so here again they are telling, okay, even if this warranty or replacement looks like free, but whatever amount we have charged from the customer, that includes the amount for replacement. Okay, if that includes the amount for replacement, then this supply is not considered as an exempt supply. It will be considered as a taxable supply, and distributor, etc., will not have to the manufacturer will not have to do any reversal. Okay, even if manufacturer is giving it to the distributor for free, he has already, at the time of initial sale, he has already charged that consideration, so he is not required to do any reversal of IT. Are you understanding this? This is the next point. Another point. Do you recollect that credit note point? Yes, where the distributor had given the goods as replacement to the customer out of the new stock of the manufacturer. In that case, manufacturer had issued the credit note. If credit note was given, then anyway the tax liability gets adjusted. Yes, because credit note is always of a particular value plus the tax amount, right? And similarly, let's say distributor does the replacement for the customer from his own stock. Okay, he does the replacement for the customer from his own stock, and then he goes and asks it from the manufacturer. Okay, and manufacturer gives it to the distributor for free, that is without charging any consideration. Then in that case, anyway, there was no GST applicable, but again this cannot be considered as an exempt supply. This will be considered as a taxable supply. So in this case, again, manufacturer is not required to do any reverse. Are you understanding this? Yes. So basically, see, whenever you listen to the word called as free warranty, okay, for the purpose of paying GST, there will be no GST because the value was already included in the original goods value. Okay, let's say I have purchased this AC. Okay, let's say I have purchased this AC for 45,000 rupees, and they are giving me 1 year free warranty also. Means in that 45,000 I have paid for that warranty. Okay, later when there is a free replacement, at that time again there will be no GST applicable. GST was applicable initially itself. Yes. Okay. And last, what are they trying to tell us here, everyone? Where the distributor provides repair, not replacement now. When the distributor provides repair service in addition to replacement service without any consideration, but distributor takes the reimbursement from the manufacturer, etc. Whether ITC is available or not, definitely ITC will be available. Now see, everyone, just try to understand. Let's say distributor provides it to whom? Distributor provides it to the customer for free. Repair it is providing it to the customer for free. Okay, and then manufacturer is reimbursing to the distributor. Then who will raise the invoice on whom? Distributor will raise the invoice on the manufacturer, and manufacturer will pay for the same. So can we say manufacturer will be eligible for ITC? If manufacturer has paid to the distributor, he will pay along with GST. If he will pay along with GST, then ITC on the same will also be available. Right? So ITC, basically conclusion here is, in none of the cases, the ITC is going to be blocked. Okay? In none of the cases, ITC is going to be blocked. I hope you have understood till here. Yes? Okay. Okay, so let's start with the other amendments of the ITC chapter. Let's try to do that. Please come to section number 16(2)AA. In your ITC chapter, please come to section number 16(2)AA. In the beginning itself, we have got section number 16, right? In that section number 16(2)AA. I hope you have got it, everyone. Okay, so now in section number 16(2)AA, what we had seen was when is ITC available? Okay, this is a very normal thing which we have revised so many times in the class also. When will a registered person be eligible for ITC? Only when the details have been put in GSTR1 or when the details have been put in IFF. Okay, by the supplier. If supplier puts my details in GSTR1 or in IFF, then I will get the credit of the same in which form? In form number GSTR2B. Do you recollect this? Okay, now what they have done is they have introduced one more form called as GSTR1A. Okay, along with GSTR1. GSTR1 is still there. There is one more form, that is one more return, the statement that is introduced called as GSTR1A. So if the supplier puts the details in GSTR1, or if he puts the details in GSTR1A, or if he puts the details in IFF, then only I will be able to get the credit in my GSTR2B. So this is the new thing which has been added here. Okay, ma'am, what is GSTR1A? That we will see when we do the returns chapter. Okay, but along with GSTR1, now the supplier can also fill one more statement called as GSTR1A. Okay, that is one of the amendment that is given here. Okay. Now, in short, if I want to tell you, can we say all the supply details are put in GSTR1? Yes, by the supplier. Now, if the supplier wants to do some correction, okay, or if he wants to amend some details, then those amendments can be done in GSTR 1A. Okay, and then the data goes in which form? Then the data goes in the recipient's GSTR 2. Okay, so GSTR1 is the original form that is used, and if we want to do, if the supplier wants to do any corrections, any amendments, any additions, then in that case it can use the form called as GSTR1A and it can do the same. Manageable till here? Yes. Okay, that was a small amendment, that is given in 16(2)AA. Okay, then after that let's go ahead. Similarly, consequential amendment in 16(2)BA. In your textbook, everyone, you can come to point D, that is 16(2)BA. We had studied a point that whatever details are furnished by the supplier in GSTR1, 1A, IFF, that will get reflected, that will get auto generated in the recipient's GSTR2B, and that should be such what do you say, ITC which is not restricted. Okay, it should be such ITC which is not restricted because of any reasons. So the entire section remains the same, just that along with GSTR1 we have to take the reference of GSTR1A also. Okay, that was another amendment. This one we have already covered. Reverse charge mechanism invoices. Okay, then a new section is inserted, that is section number 16(6). Let's try to do new section, section number 16(6). Here it is. Can we start? Yes. Okay. Now see, do you recollect section number 16(4)? First of all, 16(4) was the time limit for availing ITC. Do you recollect what is the time limit for availing the ITC? So whatever invoices or whatever debit notes are issued in a particular financial year, of that we can take the ITC anytime till 30th November of the succeeding financial year or before filing the annual return, whichever is earlier. Okay, if you do not take, let's talk about the financial year, let's say 24-25. Let's talk about 24-25. Whatever invoices or whatever debit notes are issued during the year 24-25, that you can avail maximum by next year 30th November or before filing the annual return for the financial year 24-25, whichever is earlier. Okay, and whenever we want to avail the ITC, we need to file the returns. Okay, return filing is mandatory. Without filing GSTR 3B, you cannot avail the ITC. Okay, now they are telling us about a special case, okay, which is put here in section number 16.6. What are they telling us here is, let's say for example, if someone's registration has been cancelled, okay, if someone's registration has been cancelled and subsequently it has been revoked, means cancellation has been cancelled means the registration has now become active. Okay, so first the registration was cancelled. You will study more about this in the registration chapter. So if the registration is cancelled and then it is revoked, means now the GST department is saying no, okay, we will not cancel it. Okay, maybe you made a application, you made a request, etc. Then in that case, for this period, okay, from the day when your registration was cancelled till the day your registration is made active, during this period, you were not able to file the returns on the GST portal. Okay, because your registration showed cancelled till that time, so you were not able to file any GSTR 3B, etc. Okay, so now what excuse will you give to the government? Sir, I was not able to file the GSTR 3B during this period, maybe pertaining to the previous financial year, etc. So, sir, how can we claim the ITC? Sir, how can we claim the ITC? And we already have section number 16.4 standing with us, which says that the time limit for availing the ITC is limited. That is till 30th November or before filing the relevant annual return, whichever is earlier. But sir, because your portal did not allow me to file the returns during this period, so how can I avail the ITC now that my registration is going to be active? The government says, okay, section 16.6 says that, okay, we will provide you certain relaxation. The relaxation is that, okay, no problem. Once your registration has become active, if you are able to file the return within 30 days of revocation, okay, within 30 days of revocation, if you are able to file the return, well and good, then you can avail the ITC. Okay, but if you are not able to file it within a period of 30 days, then gone. Okay, then it is gone. Then you cannot avail the benefit of ITC. I hope you are very, very clear with this. Yes. So this specific section is applicable only when your registration was earlier cancelled and now it is revoked and you could not file the returns during this interim period. So no problem. When your registration has become active from that day, within 30 days, we will still allow you to file the returns and you can avail the benefit of ITC. Yes, this was told under which section number? This was told under section number 16. Yes. Okay. Okay. Next, one more circular. Please come to blocked credit points, everyone. In blocked credits, the first one, motor vehicle. In blocked credits, the first one which was talking about motor vehicle. Do you recollect in this motor vehicle point, we had studied that if there is a particular motor vehicle which is used for transportation of persons with seating capacity of less than or equal to 13 persons, okay, then it was considered as an ineligible motor vehicle. And if it is an ineligible motor vehicle, then in that case, ITC on that same is going to be totally blocked. Okay, ITC on that is going to be totally blocked, but we had studied certain exceptions that let's say if this motor vehicle is purchased by a car dealer because he is going to do a further taxable supply, then in that case ITC will be allowed. If someone is going to use it for rentals, okay, a cab driver is purchasing it because he is going to maybe a tours and travels company is purchasing, maybe because he's going to give it further on rent, etc. Or a motor driving school is purchasing it because they are going to impart training. Means whenever we are going to use that motor vehicle for further taxable supply, then then ITC on the same is going to be allowed. Okay, so now we have got a clarification on this point itself. Now see what are they telling us here. Clarification on availability of ITC in respect of demo vehicles, which are motor vehicles for transportation of passengers having approved seating capacity of less than or equal to 13 persons, related to point number 17.5a. Okay, see what are they telling. As demo vehicles are used by authorized dealers to provide trial run and to demonstrate the features of the vehicle to potential buyers, it helps the buyers to make a decision. Therefore, as demo vehicles promote sale of similar type of motor vehicles, they can be considered to be used by the dealer for making further supply. Okay, accordingly, ITC in respect of demo vehicles is not blocked. Okay, now let's say there is a car company. Okay, let's say there is a car dealer, for example. Okay, let's say there is a car dealer, and car dealer is going to further sell the car to its customers. Okay, car dealer has purchased a particular car which is a demo vehicle, means which he is going to just use for demonstrating to its customers. Okay, and by taking a demo on that vehicle, the customer can decide whether to purchase this car or not to purchase this car. So even if this demo vehicle is having a seating capacity of less than or equal to 13 persons, but can we say this demo vehicle is going to be actually used for doing further supply to the customers? Yes, this is also going to be used by the car dealer to convince the customer ahead. So whenever this car dealer has purchased the demo vehicle, ITC on the same is going to be allowed. It is not going to be blocked. Okay, this is a clarification. This is a clarification which has been put in this motor vehicle point. I hope I am very, very clear with this. Yes, this is the circular. The circular is also put in your amendment notes, and it is anywhere there in your mail. I hope this much is manageable, everyone. Yes? Okay. Okay. So I hope all the amendments till here, are manageable for you. Yes, ITC, small amendments are there. Yes. Okay. So now that we have completed the basic amendments of ITC, there are a few more circulars which are added mainly for the CA final level. Let's try to complete those, everyone. Very, very simple circulars, nothing to worry, no new concept, only clarification. Okay. So now let's go to the first one, that is circular number 214 oblique 8 oblique 2024 dated 26th June 2024. Now that you already know about reversal of ITCs as per rule number 42 and 43, that is if we are doing taxable supply as well as exempt supply, or if we are doing taxable as well as non-taxable supply, then whatever is your inputs, okay, whatever is your inputs on that, you will have to reverse the proportionate ITC as per rule number 42 and 43. Okay, so now first circular that they have put for this particular purpose is, now you must have tried to recollect in value of supply chapter in rule number 32 subrule 4. 32 subrule 4 we had done about life insurance policies, etc. Yes, if you want, I'll just show it to you from your textbook. Do you recollect there a particular value was determined, and we had studied that rule number 32 is going to override all the other rules. So if you are a life insurance company, or if you're an insurance company, then in that case valuation for the purpose of GST you have to do it in a certain way, right? This is what we had studied. And in that, do you recollect where the insurance company is giving a dual policy? Okay, dual policy means where life risk is also covered and plus investment portion is also covered. Do you recollect that? Okay, so there we were taking the value that we were taking is equal to the gross value, right? The gross value minus the portion which we have allocated for investments or savings if intimated to the policy holders. Do you recollect something like that? Yes. So what was happening there is, whatever value we were taking, a particular gross premium was taken, and from that gross premium, we were removing something. What were we removing? We were removing that particular percentage which was allocated for investments, and only on the balance amount, only the balance amount was considered as value, and on that amount GST will be applicable. Okay, so now the circular, the clarification that they have given here is, see, this everything will be done by the insurance company, right? So they are removing certain percentage, means basically they are reducing the value. Now the question arises is this an exempt supply? The portion that we are reducing, is this portion an exempt part, or is this portion a non-taxable supply part? Answer is no. Okay. So whatever are the inputs for the insurance company, see, this is the output. Okay, this is the output. Our output is getting reduced because of the valuation rules. Okay, because this part is getting reduced because of the valuation rules. Now, whatever are the inputs of the insurance company, on that the insurance company, is it required to reverse some amount of ITC or not? That is the question. Okay, so now what are they telling here? Whatever reduction is done, this is not due to any exempt supply, or this is not due to any non-taxable supply, etc. So rule number 42 and 43 reversal will not apply here. Okay, when does rule 42, 43 reversals apply? Whenever there is some personal use happening, or whenever there is any exempt supply that we are giving, whenever we are giving any taxable, non-taxable supply, etc. At that time, whatever is our proportionate ITC on inputs, that we are required to reverse. But here they are telling that the whatever reduction is happening, okay, whatever reduction is happening from the value, because of that you are not required to do any reversal of ITC on your inputs. Okay, that is the clarification which they have inserted here. Okay, so see what are they telling? It is clarified that the amount of premium for taxable life insurance policies which is not included in the taxable value. Okay, this portion which is not included, okay, this investment portion which is not included in your taxable value cannot be considered as pertaining to non-taxable or exempt supply, and therefore there is no requirement of doing the reversal as per rule number 42 and 43. Are you understanding this? Simple, basic? Yes. Okay, so the circular number 214 is done. It was only this much, right? Okay. Then after that, one more circular inserted. Everyone here, circular number 217/11/2024, same dated 26 June 2024. Okay. Now listen, before you read all these things, let me tell you the entire transaction, like what are we going to discuss about here. Let's try to understand that. Okay, now let's say I have taken a motor vehicle insurance, okay, a car insurance or something, general insurance. Okay, I've taken a car insurance, and so what happens there? If something happens to my car, okay, if accident happens, or if there is some damage that is happening to my car, then I will go to the insurance company and I will ask for claim, right? I will ask for claim. Now let's say here this particular circular is basically talking about the reimbursement mode. You must have heard about reimbursement mode and cashless mode. Okay, in medical insurance maybe you must have heard about it. Okay, let's say I am having a cashless, like that particular garage is having, where I'm going to take my motor vehicle, that is having a cashless facility. Means I will just show my insurance policy. I don't have to pay anything. Insurance company will directly pay to the garage. Okay, but suppose if that garage is not covered under the cashless network, then in that case, what am I supposed to do? I, as the owner of that particular vehicle, I will pay the charges. Okay, I will pay the repair expenses, etc. to the garage, and later I will get it reimbursed from the insurance company. Okay, so initially I will have to pay to the garage person because he is going to do my repair, and then I can take as a reimbursement from the insurance company. Okay, so basically what happens here is, let's say this particular person is the owner. He will pay the amount to whom? He will have to pay the amount to the garage person. Why he will have to pay the amount to the garage person? Because garage person is going to do my repairs. And then once all these things are done, I will take all my documents, etc. to the insurance company, and I will tell to the insurance company, sir, please supply me your insurance services and please pay me the claim for the same. Are you understanding this? Okay, so this is how it normally works. Now the question arises. Now, ma'am, what documents? Let's say now first I went to the garage person, he did all the repairs, everything is done. Okay, then after that, I will go to the insurance company with all the documents saying that, see, my expenses have been incurred, please reimburse me for the same. So insurance company will say that, where are the invoices? How much expenses you have done? कितना खर्चा किया है? Bill किधर है? Documents किधर है? Etc. etc. That person will ask. So now when I take this bill, when I take the documents to the insurance company, can I say I will take all the invoices, etc.? Yes, invoice will be issued by whom? Expenses, repair invoices will be issued by whom? That will be issued by the garage. Okay, now listen. These invoices should be issued by the garage in whose name? This should be issued in the name of insurance company. Then only the insurance company will reimburse this amount to. Are you understanding? See, I did the payment to the garage. That is okay. Okay, for that the garage has to issue an invoice, and that invoice will go in whose name? That invoice will go in the name of insurance. Okay, so what is the inward supply for insurance company? What is the inward supply for insurance company? Inward supply for insurance company is going to be the motor vehicle repair expenses. And what will be the outward supply for insurance company? That is going to be the claim amount which the insurance company is going to pay. Right? Invoice is issued by whom to whom? Invoice is issued by the garage in the name of insurance company. So now my second question to you is, will the insurance company be able to take the ITC of the same? For the motor vehicle repairs, will the insurance company be able to take the ITC for the same? Answer is yes. ITC will be allowed. Why? Because insurance company is providing me insurance services for which it incurred the motor vehicle repair expenses. So now the entire circular is about the same thing, that when the garage issued the invoice, okay, when the garage issued the invoice in the name of insurance company will be able to take the ITC of the same, because insurance company is also going to use it for providing the output services. Are you clear with this? Okay, so ITC will be available to whom basically? ITC will be available to the insurance company. Are you clear with this? Okay, this is what was told in the entire circular. Okay, now based on that, there were three following questions which came into picture. First one, what is the extent of ITC available to the insurer in case of two separate invoices by the garage for repair services? Garage gave one invoice to the insurance company for the approved claim cost and another to the customer for any excess amount. What if garage is giving two invoices, one to the insurance company and another one to the owner of that particular car? So how much amount of ITC will be available to the insurance company? Can we say this is very, very logical? Insurance company will get only that amount of ITC which is written in the invoice which is issued in the name of insurance company. Okay, whatever invoice is given to the owner, for that the insurance company cannot take any ITC. Whatever invoice I as an insurance company I am receiving, I can be eligible only for that amount of ITC. Okay, because invoice should be there, na? Invoice should be there in whose name? Invoice should be there in the name of the insurance company. Right? Chalo, going to the next one. What is the extent of ITC available to the insurer in case of single invoice issued by the garage covering the full amount for repair and service, and the insurance company reimburses only the approved claim cost? Okay, let's say invoice issued by the garage to the insurance company is, let's say, of 1 lakh rupee. Okay, but insurance company says that no, we cannot give full 1 lakh rupee because as per us 1 lakh rupee full is not approved. Okay, so let's say from that it does a payment of only 80,000 rupees. then in that case, will the company get the full ITC or will it get only the proportionate ITC? So the answer is ITC will be available only to the extent of reimbursement of the cost. Means only 80%, means only 80%, not full 80,000 or not full 1 lakh. Okay, only to the extent of 80,000 ITC will be available to the insurance company because it is not approving the entire reimbursement to the owner, right? And similarly, what if the invoice is not in the insurance company's name? If the invoice is not in the insurance company name, can we say basic condition of section number 16 is not getting fulfilled? Remember, proper documents should be there for availing the ITC. What if I don't have the invoice in my name? Go or gone. Okay, then in that case, ITC will not be available because the basic conditions are not yet manageable till here. Yes. Okay. Then going to the next one. Let's go to the next one. Simple now? Yes. Okay. Now going to the next one. One more circular here, everyone. Yes. Circular number 231/25/2024 dated 10th September 2024. This is basically talking about the demo vehicle. Do you remember we just now discussed in the amendments itself, we discussed something about demo vehicle, which was pertaining to section number 17, that is your blocked credits, etc. So in vehicles, we had seen that, okay, some categories of vehicles, credit will be totally blocked. But if a person is purchasing a demo vehicle for making a taxable supply out of it, then in that case, ITC on that demo vehicle will be allowed, right? Now one more clarification added, or two more clarifications added in that thing. Okay, now just try to understand, what if you as a dealer, okay, what if you as a dealer, you have purchased this demo vehicle and you have capitalized, okay, you have capitalized this demo vehicle in your books of accounts. What will happen then? What if you have capitalized this demo vehicle? So can we say if you have capitalized this demo vehicle in your books of accounts, it will be considered as capital goods now? And ITC, just like it is available on goods, similarly ITC on capital goods is also available, right? So ITC on the demo vehicle will be allowed. It will not be blocked. Okay, but do you recollect depreciation provision? What if you are taking demo vehicle depreciation also on the tax portion and you are taking the ITC also? Both are allowed or only one is allowed? Either you can claim depreciation on the demo vehicles tax portion, or you can take the full ITC. Either of it, any one of it can be taken, but not both. I think this we had done in section number 16, subsection 3. Section number 16, we had done this particular provision that on the tax portion, either you take the depreciation or you take the full ITC of the same. So that same restriction will be applicable here also. Okay, and one more thing. Later, now suppose now you have capitalized that demo vehicle in your books of accounts and now you are selling this demo vehicle. First you capitalize. So can we say it will be considered as capital goods? And now you want to sell this capital goods. So can we say if you're selling this capital goods, then section number 18(6) will be applicable. If you're selling the capital goods, so at the time of sale, you have to pay that some amount of tax. Do you recollect tax on transaction value or ITC taken minus 5% per quarter, something like that? We had studied in section number 18(6). Do you recollect that? If not, I'll show you what was written in our notes. See this. Amount payable, section number 18(6). Amount payable on sale, supply of capital goods or plant and machinery on which ITC has been taken. So you have to pay higher of the two amount, ITC taken on such goods minus 5% per quarter, and or transaction value or tax on transaction value, whichever is higher. Are you able to recollect this? Yes. So because now it has become your capital goods, and because you had because you're capitalized, it became your capital goods, and later if you plan to sell these capital goods, then provisions of section number 18(6) will apply. Manageable? Simple? Yes. Okay. And then after that, one last thing, not very important, but I just wanted to show you this. Please come to section number 17.5 C and D, that works contract and self construction of plant and machinery. Please come to that. There was a case law actually there. Not very important for us at this moment, but still. Yes. Okay, now listen. When you check section number 17.5C, okay, when you check section number, this one. When you check section number 17.5C, at that time, they were talking about construction of immovable property, works contract. Okay, and then in immovable property, we had seen about that plant and machinery was an exception and all those things we had studied. Now, what is the thing here is, the law observed, okay, the court observed that when we are discussing about 17.5C, they are using the word plant and machinery. Okay, they are using the word plant and machinery. Okay, but when you go to section number 17.5D, okay, that is self-construction of immovable property, etc. At that time, they are using the word plant or machinery. Okay, they are using the word plant or machinery. And that was, this distinction was observed in the case of Chief Commissioner of CGST versus Safari Retreats Private Limited 2024. Okay, so here the Supreme Court finally said that if you are using two different terms, plant and machinery and plant or machinery, then in that case, both of them cannot be considered as same. Okay, plant and machinery will be different, plant or machinery will be different. And then the Supreme Court simply said that in every case, you will have to, from case to case basis, you will have to determine. Okay, that is in 17.5C. In 17.5C, the credit will be, ITC will be allowed only if it is plant and machinery. And for 17.5D, credit will be allowed only if it is plant or machinery. So you will have to determine from case to case basis whether it is plant and machinery or whether it is plant or machinery. And finally, the court upheld the constitutional validity. That was, what is this? Constitutional validity of that section, section 17.5C and D. Okay, so basically, this is not really very important, but just try to remember this. Okay, earlier what used to happen, you know, when we used to study as a student, at that time, since there was no clarification, we used to take both as same, plant and machinery, plant and machinery, plant and machinery, plant or machinery, it doesn't matter. But now the court has highlighted that this is the difference and it is going to like vary from case to case, whether ITC will be available or ITC will not be. Are you clear with this? Yes? Okay, so these were all your amendments from all the relevant amendments from the ITC chapter. Yes, please go through it once, because again I am telling, these are amendments. Okay, you can definitely expect a couple of questions from the amendment part or the additions and the circulars. Yes. Okay, let's go to a small amendment in the next chapter, that is the registration chapter. In your registration chapter, please come to section number 24. Or 23 and 24, actually both of it. In your textbook, you will first find section number 24, which talks about compulsory registration. In compulsory registration, in your textbook itself, within compulsory registration, in your textbook itself, can you see this third point? So we had studied the cases, we had studied the entire list where the persons are required to get themselves compulsorily registered. In that, one of them was, if you are a recipient, okay, I am not the supplier, I am the recipient on which I am required to pay the tax under reverse charge mechanism, then I have to get myself compulsorily registered. That was the point given here. Can you just read this one so that you will be able to recollect? Yes. Persons who are required to pay tax under reverse charge mechanism on inward supplies received. However, the one who is exclusively making outward supplies. See, when we talk about a supplier and when we talk about a recipient, okay, when we talk about supplier, when we talk about recipient, and if this transaction comes under reverse charge mechanism, then the provision that we had studied was recipient, because now RCM is applicable, so recipient will be required to pay the tax. So recipient will be covered under section number, recipient will be covered under section number 24, and he will be required to take compulsory registration. Okay, and at the same time they had told that supplier is not liable. Okay, supplier is not liable if he is doing only those supplies where RCM is applicable. So supplier is not liable to compulsory registration. Yes, they are exempted from registration. This is what we had studied, and now they have just added a point there. They have just given a reference there that this clause is not applicable. The supplier clause is not applicable if he is a supplier of metal scrap. Means if this person is a supplier of metal scrap, and here even if recipient is even if the transaction comes under reverse charge mechanism, still exemption from compulsory registration is not applicable to supplier. Means supplier will have to get himself registered. Yes, again I will repeat from the amendment notes, everyone. See, if there is a supplier, okay, if there is a supplier who is doing some supplies which is taxable under reverse charge mechanism, that is taxes payable by whom? Taxes payable by the recipient, then recipient is liable to take compulsory registration, and supplier, because there is no tax liability on him, he is exempted from registration. But if this supplier is a supplier of metal scrap, okay, if he is a supplier of metal scrap, then he will have to take himself, he will have to get himself registered. Okay, this is the point that is coming under section number 24 also, and the same reference is going to come in section number 23 also. Person not liable to registration, in that there was a point here. There was a point here. Person making only reverse charge supplies. So any person who is making only reverse charge supplies. So supplier was exempted from registration, but this point is not applicable if you are a dealer of metal. Manageable? Yes. Okay. Done. It's done. Okay. So now in the registration chapter, one amendment that we completed was about that compulsory registration. That point we completed, that any person who is just required to pay, who is just doing outward supplies, and that is taxable under reverse charge mechanism. So compulsory registration was not required except if he is a supplier of metal scrap, etc. That was one of the amendment that we had completed. Another one is a very nice one. Do you recollect when we did this Aadhaar authentication? Okay, in that we did one specific point. In this Aadhaar authentication, we did one specific point which was talking about risk-based system, etc. Risk-based biometric Aadhaar authentication. Do you recollect that? And they had started a pilot project in the state of Gujarat, Puducherry and Andhra Pradesh, something like that we did. So now what they are doing is, that this risk-based biometric registration, okay, whichever the government is identifying, whichever the system is identifying that this particular person is a risk-based person, etc., and we should tell him to come to the facilitation center and do the Aadhaar-based authentication, etc. So now this has been made applicable. Now this has been made applicable to all the states and union territories. Okay, earlier it was just a pilot project in these three states, Gujarat, Puducherry and Andhra Pradesh, but now it has been made applicable to all the states and union territories. Okay, so that is one change actually which has happened. And okay, that's it. Manageable till here? Okay. And yes, one more change, one more amendment. Please come to rule number 21. Please come to rule number 21. I am showing it to you from the book so that it becomes simple for you to correlate. Yes. Rule number 21, where this comes under the circumstances when the proper officer can cancel the registration on his own. Okay, basically in the answer of cancellation of registration. In cancellation of registration, this is there. In that we had studied many cases, remember? Yes, here it is, rule number 21. Prescribed contraventions which make a registered person liable to cancellation of registration just come here. And in that we had studied various cases. If he is not conducting any business from his registered place of business, or if he is if he is doing involved in that anti-profiteering measures, or if he is doing some supply without the invoices, or if he is not issuing the proper invoices, if he violates the provisions of rule number 10A, that bank account, etc., if he has not furnished the details in GSTR1, GSTR1A, etc. Okay, in all those cases, okay, in that one of the new points which has been added here is this point. Okay, one of the new points which has been added here is this particular point. Yes. So now registration can be cancelled where a person violates third or fourth proviso to rule number 23(1). I have given the details, don't worry. So if a person fails to file all the returns, see, whenever a particular person's registration is cancelled, okay, as soon as his registration is cancelled, he is not allowed to file the return. And later if he applies for revocation, okay, then from the date of order of cancellation till the date of order of revocation, okay, within 30 days he is required to file all those returns. First it got cancelled, then it got revoked. During this time I was not able to file the return. So whenever my registration got revoked, within 30 days I am required to file all the returns. Okay, so if he does not file the returns within a time period of 30 days, then finally, then no second chance, then your registration will be cancelled. So that is one more point that has been added here. Yes. So whenever my registration got revoked, from that day, within a time period of 30 days, I have to file all the past returns. If I am not filing, then finally my registration will get cancelled. Manageable till here? Yes. And yes, okay. Another thing is, wherever you have got this GSTR1 reference, along with that they have added the GSTR1A reference. Okay, from GSTR1A, I have told you also, and again we are going to do it in the returns chapter. What does GSTR1A stand for? Okay. Okay, let's do a small addition in your tax invoices, credit and debit notes. Very simple. Again, a procedural thing that they have put here. The small note. Can you see this? Yes. So what are they telling us here is, whenever there is any supplier, okay, whenever there is any supplier who is providing online money gaming services, or whenever there is any supplier of OIDAR services, that online information, that access retrieval services, etc., when it is supplied to an unregistered person, okay, Netflix kind of a thing, when they are supplying it to an unregistered person, then in that case the invoice will be issued by the supplier to us, and in that invoice the state of the recipient, Maharashtra, Gujarat, state of the recipient should be present. Okay, when they are writing my name, my full address is not required to be put, but the state where I am located, that should be put, and the same shall be deemed to be the address on record of the recipient. Okay, my address, my full address is not required, just the name of the state would be sufficient. Okay, so this was the small addition that they have done in this particular chapter. That's it. Okay. Now let's go to the next small amendment which is there under the payment of tax chapter. Payment of tax. In payment of tax in our textbook, please come to section number 50, 50. Please come to section number 50, where we had done the interest calculations in multiple cases, etc. I hope you are there on section number 50, everyone. Section number 50. Yes. Okay. In section number 50, in the first point itself, there is one extra thing that has been added here. See if you can recollect. I'll just help you in recollecting the provision. The provision was such that we have for a particular time period, for a particular period, let's say for a particular month or for a particular quarter, we have shown, okay, we have shown all our sales. We have shown all our sales in the GSTR 3B. Okay, we have shown, we have disclosed everything properly, but there was a delay. Okay, but there was a delay in filing the GSTR 3B. So they had told that for whatever number of days the delay is there, okay, beyond the due date, then interest will be applicable at the notified rate, right? Now let's say your tax liability, your output tax liability or sales tax liability is equal to 100 rupees, amount which is kept in your electronic credit ledger. Credit ledger will be utilized first. Let's say you have got 40 rupees kept in your electronic credit ledger, and the amount payable by you from electronic cash ledger. Okay, electronic cash ledger amount payable was 60 rupees. So can we say interest will be applicable only on the 60 rupees? This is what we had studied. Okay, why interest will be applicable on the 60 rupees? Because there was a delay in filing the GSTR 3B, means there was a delay in payment of this 60 rupees also. So government will say that, okay, interest will be applicable on this 60 rupees. Okay, but now very good point that they have introduced here is, what if I have deposited this 60? Okay, what if I have deposited this 60 rupees in my electronic cash ledger? What if I have deposited this 60 in my electronic cash ledger before the due date? Means money was kept in the electronic cash ledger. Electronic cash ledger, I have put money from my bank account into the electronic cash ledger. Just that there is a delay in filing the GSTR 3B. So they say that if before the due date of filing this GSTR 3B, if 60 rupees was already kept, it was already credited in the electronic cash ledger, then interest will not be applicable on the 60 also. Because it's just that there was a delay in filing the return, but the money was already given to the government. Okay, so there will be no interest applicable there. Okay, see what is the wording given here. However, where any amount has been credited in the electronic cash ledger on or before the due date of filing the said return, but is debited from the ledger while filing the said return after due date, means 60. See, 40 is anyway kept in my electronic credit ledger, that is anyway with the government. And this 60 also, this 60, the balance tax payable also, I credited, I put that money in the electronic cash ledger, just that there was a delay in filing the GSTR 3B. Then government says we cannot take interest on this 60 because the 60 rupees is already with the government. Okay, just utilization of the 60 is left. Okay, utilization for payment of tax is left, but that money is anyway kept with the government. So the said amount cannot be taken into consideration while calculating such interest if the said amount is lying in the ledger. Are you clear with this? So good point for the taxpayers. Good point for the taxpayers, because see, ultimately I had to pay how much? Ultimately I had to pay this 100. How did I decide to pay this 100? 40 I decided to pay out of my credit ledger. Whatever balance is kept in the credit ledger, that is anyway on the government portal. So that money is anyway gone to the government. Okay. And this balance 60, I decided to pay from my pocket. From my pocket, I decided to pay. And this I had already put from my bank account to the electronic cash ledger before the due date itself. So actually speaking, the money is anyway with the government. So government is not going to take any interest on the same. I hope this much is manageable, everyone. Yes, simple. Okay, done. Manageable till here? Okay, so let's start with the next chapter amendments, that is your TDS and TCS. Good amendment made here in TCS. Okay, in TDS also we have got one amendment, but let's complete it one by one. First, let's go to the TDS addition that they have done, that is section under section number 51. Do you recollect the provisions of TDS? Yes, when there is a particular registered person, okay, whenever he is doing some transactions with central government, state government, local authority, governmental agencies, notified persons, etc. At that time, whenever these people pay the consideration to the registered person, at that time they will be required to deduct the TDS. Do you recollect this provision? This we had studied that provided there were certain conditions, the value should be the total value of taxable value of goods and services. If under a contract that should be excluding that should be exceeding rupees 2,50,000. If this condition gets fulfilled, then TDS is applicable at the rate of 1% under CGST Act. And so basically 2%, 1% plus 1% under CGST plus 1% under SGST, or 2% under IGST. So TDS at the rate of 2% was required to be deducted. Okay, now ma'am, what is the amendment in that? So the amendment is, do you recollect we had a list of this notified persons or category of persons? In that, one point has been added. Okay, so first point that we had was any authority or board which is set up by the government or under an act of parliament, etc. Second point that we had was a society which was established by the government, etc. Third point was your PSU. We had only till here. Now a new point has been added. Now a new point has been added here, that if there is any person who is purchasing, okay, who is receiving supplies of metal scrap. Okay, let's say there is a particular registered person who is supplying metal scrap. Okay, there is a registered person who is supplying some metal scrap to another registered person. Okay, metal scrap supplied by one registered person to another registered person. So can we say the second registered person is going to pay the consideration to the first person? Yes, at the time of paying this consideration, it will be required to deduct the TDS. Okay, so basically this is product specific, that whenever there is any supply of metal scrap that is happening, at that time TDS provisions will be applicable. Right, so this is one thing that has been added. So basically they are trying to expand the the provisions of GST to the metal scrap industry also, and they are trying to regulate it, right? And then correspondingly they have done the amendment here also. The amendment is, in that we had studied some cases where TDS was not required to be deducted. Remember when the transaction was happening between one PSU to another PSU? At that time this TDS was not required to be deducted. Same way, if it was happening between A to B, B to C, A to C, etc., at that time also TDS was not required to be deducted. Okay, but now they have put except the persons referred to in clause D. Okay, clause D means the newly added clause that we are talking. So basically if there is any supply, okay, if there is any supply of metal scrap that is happening between any of the persons, between A, B, C, D, then in that case TDS provisions will be applicable. Okay, so see what are they telling? It has been further provided that TDS shall be deducted by the recipient even when it is supplied between the persons mentioned in point A, B, C, D. Okay, so basically first they told that, okay, first they told that if between this A, B, C, D, if you are doing any supply internally, if you are doing any supply, then in that case TDS will not be applicable. But when it is a supply of metal scrap specifically, at that time TDS provisions will become applicable. Right? This was the amendment that they had given under TDS. Okay. TDS amendments are done. Now going on to the TCS. Okay, now going on to the TCS amendment under section 52, major amendment in TCS. Okay, so now what we had studied in our lectures was TCS. Okay, or if you are yet to start with the TCS provision, I'll tell you now itself. Earlier what happened was TCS percentage. Okay, TCS rate, TCS percentage was basically 1%. Okay, just like TDS is effectively, and final rate I'm telling, TCS was there at the rate of 1%. Now it has been slashed. Okay, it has been brought down to 0.5%. Okay, whatever rate I'm telling you of the 0.5%, this is your IGST rate. So if I tell you CGST wise, then it will be 0.25% under CGST and 0.25% under SGST or UTGST. So effectively now the new rate is going to be 0.5%. Yes. So if you are using any old book, or if you have already listened to the lectures earlier, etc., then please do this corresponding amendment. It will have effect in your question bank also. Okay, it will have effect in your question bank also. So please do the necessary amendment. Okay, TCS rate has been slashed to half. So wherever you had 1% return, okay, now please make it 0.5%. Wherever you had 0.5% return earlier, okay, wherever you had 0.5% return earlier, please make it 0.25%. Yes. See, when we talk about individual rates under CGST Act and SGST Act, then it was 0.25, then it will become 0.25, 0.25, na? Okay, and the effective rate now is equal to 0.5%. That is half percent is your TCS rate. That's it. Okay, so these are your amendments. These are your amendments. And yes, one more thing I would like to tell you is, this rate amendment. See, we did two amendments now. Basically, we did two amendments. TDS amendment we did, that is that metal scrap. Okay, and TCS amendment, that is the rate change. That amendment we did, right? Now this metal scrap amendment. Okay, see, for CA final students, both of these amendments are applicable for May 25, from May 25 examinations. When I talk about CA inter students, okay, when I talk about CA inter students, then this metal scrap, same, it is applicable from May 25 examination. Rate change is also applicable for May 25 examinations. It is not applicable for Jan 25. Okay, so these amendments are for CA inter. I am telling you, this is not applicable for Jan 25. It will be applicable from May 25 examinations. Yes, so if at all you are a CA inter student who is watching this particular lecture, then TCS rate change amendment is not applicable for your Jan 25 examinations. It will be applicable from May 25. Yes. Okay, it's done. Okay, let's do the amendment, additions and the amendments from the returns chapter. Very simple. One new thing added, two things amended, etc. that we need to do here. Okay. So first of all, when we were doing this explanation to section number 37, when we were discussing about GSTR 1 basically, do you recollect? If you are filing your GSTR 1 on monthly basis, okay, then in that case IFF facility is not applicable. But when you are filing your when you are there under QRMP scheme, quarterly return monthly payment, then for the first 2 months of the quarter you can file the IFF, and then you can file the GSTR 1. This we had studied. And while doing that, okay, this is your textbook actually. Okay, so while doing that, we had studied what all details will you submit in IFF. So we had decided that only B2B invoices, because the purpose of filing the IFF was to give the credit to the recipient. So only B2B invoices will be submitted in IFF, and rest all the details will be submitted in GSTR 1 or GSTR 1A. Okay, 1A we will do now. So rest all the details will be B2B as well as B2C will go under your GSTR 1 or 1A. In that we had studied that all the remaining B2B supplies, okay, all irrespective of amount, even if it is 100 rupees invoice, if it is a B2B supplier, we have to put that details because it has got the tax effect, because the ITC should go to the recipient. All those details will go in your GSTR 1 or 1A. But in case of B2C, in case of interstate supplies which are made to unregistered person, only those details where the invoice value exceeded a certain limit, only those we are required to submit this invoice wise details. Okay, this I am talking about invoice wise details. Rest everything is going to go on consolidated basis. Now what we had studied earlier was this limit. Okay, this limit in case of B2C supplies. Okay, in case of B2C supplies, when is invoice wise details required? When you have made interstate B2C supplies. right? Interstate, one state to another state, B2C supplies, when the invoice value exceeded rupees 2,50,000, then you had to give the invoice wise details. And interstate supplies for value up to 2,50,000, you need not give invoice wise, but you can give it for each state. Okay, now what is the amendment? This was the old provision. I will write it here. This was the old provision. Now what changes they have done is, instead of 2,50,000 limit, they have brought down the limit to 1 lakh rupees. Okay, so can we say if they have reduced the threshold limit, means now more and more invoices reporting is going to happen here, right? So if it exceeds rupees 1 lakh, if it exceeds rupees 1 lakh, then we'll have to give invoice wise details. If it is up to rupees 1 lakh, then we can give it for each state. Yes, so the only amendment here is, instead of 2,50,000, this is the old provision, na? Yes, instead of 2,50,000, the limit now has been changed to 1. Okay, please do this amendment in your book. I have also mentioned this entire table. Okay, entire table I have mentioned in your amendment sheet also. Okay, another one is about GSTR 1A. Okay, another one is about GSTR 1A, the reference of which we had seen in the earlier chapters also. So now, as I had told you, okay, overview I had given you, that suppose if you have filed GSTR 1, okay, maybe monthly basis, maybe quarterly basis, doesn't matter. Whenever you have filed GSTR 1, and if you want to do some amendment in that, maybe you want to bring some figures down, or if you want to increase some figure, then in that case, optional, okay, this is not compulsory. If you want to do any amendment, then you can file after filing your GSTR 1. Okay, you have filed your GSTR 1, now you realize that there is some mistake or you want to do certain amendments in that, then you can file your GSTR 1A. Okay, now ma'am, when can we file this GSTR 1A? So GSTR 1A, see, first chronologically if I tell you, then first you will file your GSTR 1, okay, or you will file your IFF, whatever, IFF and GSTR 1. Then you realize that there is some mistake. Okay, there is some mistake in which? There is some mistake in your GSTR 1. Then in that case, you will file your GSTR 1A. Okay, and this GSTR 1A has to be filed before filing GSTR 3B, because GSTR 3B is full and final. Okay, this is going to be full and final. So after filing GSTR 1 and before filing GSTR 3B, you have the option to file the GSTR 1. Yes, after filing GSTR 1 and before filing GSTR 3B, you have got the option to file GSTR 1. I hope I am very, very clear till here. Yes. So basically they have given a facility. They have given a facility where you can do certain amendments of any wrong data that you have wrongfully posted in GSTR 1. Okay. And then the data from GSTR 1 and 1A will go where? The data from GSTR 1 and 1A will go to the recipient GSTR 2B, and it will also come under our GSTR 3B. That's why 1A can be filed. That's why 1A can be filed only before filing GSTR 3. I hope I'm very, very clear with this. Yes, example for the same has been given here. You can just refer the example 1. And yes, again, this is an optional facility. Only if you want to do certain corrections, only if there are certain amendments, then only this has to be filed. And this can be filed only once. It cannot be like you can revise as many number of times as you want. Are you clear with this? Okay, again I will tell you. First you will file your GSTR 1. Okay, normally what happens is, from GSTR 1, the data goes into the recipient's GSTR 2B. Okay, and from there it will go into my GSTR 3B. This was my GSTR 1 and it will also go in my GSTR 3B. Now what can happen is, once you file your GSTR 1, okay, once you file your GSTR 1, if you think that there is any correction in that, you will file your GSTR 1A. Accordingly the data will go in GSTR 2B, and accordingly the data is going to go, the revised data is going to go in the GSTR 3. Are you clear with this? Yes. And the GSTR 1A, this one, GSTR 1A can be filed only before filing your GSTR 3B, and this amendment, this form can be filed only electronically. Okay, it cannot be filed manually, it can be filed only electronically. Are you clear with this? Acha, now listen, there is a date. Okay, there is a date for filing GSTR 1. right? So if you file your GSTR 1 on time, then only the data goes in GSTR 2B, right? If you file your GSTR 1 little late, okay, then can we say even the data gets delayed in GSTR 2B? So whatever data you are putting in GSTR 1A, okay, little late, then it will get reflected in your GSTR 2B also little late. I hope I'm very, very clear with this. Okay, let's say the due date for filing GSTR 1 is 10th. Okay, 10th of the succeeding month. So whatever you put in by 10th in GSTR 1, that will be reflected in relevant month GSTR 2B only. But whatever data you put, let's say 5 days later in GSTR 1A, so that will get reflected in the next month's GSTR 2B. You will be able to take the credit. That is not a problem. Just the availment of credit will be delayed because you filed this little late. Okay, but this has to be filed before what? This has to be filed before filing your GSTR 3. I hope I am very, very clear with this. Yes, same things are written here. Key features, etc. are written. Manageable? Yes. Okay. And the last amendment, the last point, the corresponding amendment that is coming up here is in form number GSTR 2B. I will show it to you. Okay, the place where we studied about GSTR 2B. From where all do we get the data in GSTR 2B? We get the data in GSTR 2B from your GSTR 1. Okay, now additionally from where will you get the data? Now additionally you will get the data from GSTR 1A, right? One is you get the data from GSTR 1 and next is, see, in GSTR 2B, from where do you get the data? You get the data from GSTR 1 and now additionally you will get the data from GSTR 1A. Okay, this GSTR 2B belongs to whom? This GSTR 2B belongs to the recipient. This GSTR 1 and 1A is going to be filed by whom? This will be filed by the manageable. So wherever you had the reference of GSTR 1 along with that, now you have also got, now you will also get the reference of GSTR 1A. Manageable till here. Done. Okay. Yes. So this is the new point that is added, that is GSTR 1. Yes. Whatever corrections we do in GSTR 1A, that will get reflected. That will get reflected in GSTR 2B. Okay. If you have filed it on time of GSTR 1, then it will get reflected for the current tax period only. If you have filed it a little late, then it will go in the next tax period. Manageable? Okay. Done. Okay, so now let's go to the last two things in the returns chapter. We had already completed about GSTR 1A mainly and that 1 lakh rupee amendment in the return. Now going on to the next one, that is the composition supplier return. Okay, you can, I hope you can recollect, GSTR 4 was required to be filed by every person who was a composition dealer, and the due date for that yearly return was that for the entire financial year they had to submit a return by 30th April of the next financial year. Then they did an amendment with effect from 10th July 2024 that from financial year for a financial year from 24-25, okay, from 24-25 they have to furnish it, instead of 30th April they will have to furnish it till 30th of June. So they have got extra 2 months for furnishing their return. Okay, so basically till financial year 23-24 the due date is going to be 30th of April, and from financial year 24-25 onwards the due date is going to be 30th of June. Okay, so this is how the changes will be taking place. So this amendment, this will be applicable from May 25 examinations. Okay, this will be applicable from May 25 examinations and onward. And then one last thing, not really very important, because your ICAI itself has mentioned it that it is not important, but still I will tell you what is that. Yes, here. Do you recollect we had studied about this GSTR 9, 9A and 9B? We had studied about this. Yes, so this GSTR 9, okay, the annual return which we had to See, GSTR 9 was that annual return. GSTR 9A was required to be filed by this thing, your composition person, and 9B was required to be filed by the e-commerce operator, which is yet to be notified. We had studied about this. So now for GSTR 9 specifically, okay, for GSTR 9 specifically, what are they telling here is, if your turnover is up to, if your turnover in the financial year 23-24 is up to rupees 2 crore, then you are exempted from filing this GSTR 9. And see what your institute is writing. This is only for information of the students and is not relevant for examination purposes. So basically, if your turnover in the financial year 23-24 is up to rupees 2 crore only, up to rupees 2 crore, then GSTR 9 provisions are not applicable, means you need not file the annual return. Yes, not really very relevant, because they themselves have told that this is not relevant for your examination. Simple, manageable till here? Okay. Okay, so let's start with the additions and amendments in appeals and revision chapter. There are certain amendments in the chapter, but very, very simple, very, very manageable. Okay, don't worry. Now, in this case, let's start with the first amendment. Okay. Now this is going to come in section number 109. Okay, if you want, you can just take out that section in your textbook also. Section number 109. Very, very small amendment. Actually, it is a corresponding amendment because of some other chapter. So in section number 109 to 111, we studied about appellate tribunal. Yes, GST 80 we studied. In that, the first point, which is written in your textbook also, in your ICAI material also, whatever. Okay, we discussed about constitution of appellate tribunal and benches. So there they had studied, there they had mentioned, right, that it can be exercised by principal branches, state branches, etc. And they had given that it will be called as the GST 80 for hearing the appeals against the order passed by appellate authority or revisional authority. Against these two, we will go and file the appeal before the appellate tribunal. One more point, one more responsibility that is added for GST 80 is now we will study this. Either if you're just looking out for amendments, then you must have already studied also that there will be a concept called as anti-profiteering measure. Okay, anti-profiteering measure, which will come in section number 171, which will be discussed in your miscellaneous provisions chapter. So earlier, anti-profiteering concept was there with Competition Commission of India. Okay, it was there with Competition Commission of India. Now they have removed this authority, and now GST 80 is going to have two responsibility. One is to listen to the appeals, etc. Yes, and second one is also going to be about dealing with anti-profiteering measures. So one role and one responsibility of this GST 80 has increased. So along with, again I'll repeat, along with listening to the appeals, okay, it will also have to listen to the cases of anti-profiteering measure. This we will again discuss. Okay, this we will again discuss when we do the amendments relating to miscellaneous provisions chapter. Yes, so that is one thing. Same corresponding amendment has been done in the same section. You will see one more heading called as jurisdiction. Okay, in jurisdiction, we had studied about principal bench. Just before jurisdiction, we had studied about principal bench and state benches, etc. So they will hear the appeal, etc. And there we had studied that for place of supply. Do you recollect? For place of supply, the cases will be dealt only by the principal bench. Okay, same thing I have written also. Whatever is there in your textbook, I have written in the amendment notes also. And yes, another thing is the extra responsibility which got added, that is about this anti-profiteering measure, etc. Even this will be heard only by the principal bench, not by the state bench. This will be heard by the principal bench. Okay, so to conclude both of these points together, one responsibility added for GST 80 is to listen to the appeals that was there already, plus to listen to the cases relating to anti-profiteering measure, and this will be done specifically by the principal branch. Okay, so this was the only amendment. This was the only amendment in section number 109. The addition, not even amendment, the addition which was done in section number 109. Right? Now going on to the next section, that is section number 112 and 113. Okay, in 112 and 113, we discussed about the appeal procedure. Okay, how the appeal procedure will be done, etc. So there are a few addition also and there are a few amendments also here, but manageable. Okay, let's try to discuss about this everyone. Chalo. Now, when we go to section number 112 and 113, so there we had already seen that the form for filing the appeal, okay, this is not new. This is already we had done. Appeal can be filed. Appeal shall be filed in GST APL 05 along with all the relevant documents. Normally, it is to be filed electronically. This we had studied, and as soon as the appeal is filed by the appellant electronically, a provisional acknowledgement will be issued to the appellant. Okay, this we had already studied. Uh, earlier. Okay, this is nothing new. Now, just the only thing they are adding here is this part. Okay, in some cases, the appeal to the appellate tribunal may be filed manually also in GST APL 05 along with the relevant documents, but only if the registrar allows. Means only if there are some exceptional circumstances, if there is some special order passed, etc., then in that case we can file this appeal manually also. Otherwise, it has to be filed electronically. Okay, so this point is to be amended in the point called as form for filing the appeal. Normally electronically. Okay, earlier the words used were electronically or otherwise. So now electronically, or it can be done manually in certain cases, but only if it is permitted by the registrar. Yeah, yes, if you are filing it electronically or if you are filing it manually, in both the cases, provisional acknowledgement will be given to the appellant. Whoever is filing the appeal, it will be given to the appellant immediately. Yes, so this was another addition that is done. Okay, in the same sections, okay, 112, 113, there was a point called as fees for filing appeal. Okay, that was already there in our book, where we had already studied that for filing the appeal or for restoration of appeal, the fees was rupees 1000. I'm telling you the existing scenario, then I'll tell you the amendment also. Okay, rupees 1000 for every 1 lakh of tax dispute. Right, for every 1 lakh of tax or input tax that is involved, or the amount of fine, penalty, whatever is the amount involved, for every 1 lakh, means wherever there is any tax involved. Okay, wherever there was any tax involved, or whenever there was any fine, fee, penalty, etc., for every 1 lakh rupees, the fees was rupees 1000, and we had studied that the maximum limit was the maximum limit of this appeal fees was 25,000. Now what they have done? Is they have put a limit. Minimum. Okay, minimum fees 5,000, maximum fees 25,000. Okay, so even if you fall under the first category, as per the first line, the fees will be 1000 rupees, but they have set a minimum of rupees 5,000 and maximum will go up to 25,000. Okay, this is one particular thing. And another thing, suppose if the appeal is related to some other matter, okay, if the appeal is related to some other matter which does not have any tax amount involved, etc., that is this every 1 lakh, etc., is not involved, fine, fees, penalty, etc., is not involved, then in that case, for non-monetary appeal, basically for no tax dispute appeal, etc., there is a flat fee applicable of rupees 5,000. Okay, earlier there was no mention of this, so we assume that there is no fees applicable, but now they have stated that fees for filing of an appeal in respect of an order not involving demand of tax, interest fee, then the fees will be flat rupees 5,000. Okay, so whenever any tax or any amount is involved, at that time normally 1000 for every 1 lakh rupee. Okay, but minimum 5,000, maximum 25,000. And when there is no tax amount involved, no tax, fine, fees, penalty involved, at that time, still you want to appeal against the order, then in that case, there will be a flat fee applicable of rupees 5,000. Manageable till here? Yes. Okay. Then after that, going to the next one. Okay, let's go to the next amendment that they have done. Immediately, okay, in your textbook also, immediately you will see a point called as departmental appeal. I hope you can find it, everyone. Departmental appeal. What is this departmental appeal talking about? Can we start? Yes. Okay. So we had studied under the point called as departmental appeal that the commissioner, okay, the commissioner, once it receives the order, it can tell to its subordinate officer that we are not happy with the order which is passed by the lower authority. So commissioner will tell to the officer that please go and file the appeal to the appellate tribunal, and that was required to be filed. Okay, so basically earlier the order was passed by whom? Earlier the order was passed by the AA or the RA, right? Appellate authority or the revisional authority. Commissioner now, officer is satisfied, lower level officer is satisfied, usko kuch farak nahi padne wala. Okay, and now the commissioner suo moto on its own motion, or this way, this person says that I'm not happy with the order that is passed, that is against the department. We are not happy with the order passed by AA or RA. So someone from the department has to file the appeal. So commissioner will tell to the officer, please go and file. Please go and file the appeal. Please apply to the appellate tribunal within a time period of 6 months. Okay, this is nothing new that we are studying. And this appeal was required to be filed in GST APL 07. Okay, within a time period of 6 months, etc., etc. Do you recollect 6 months from whenever the order was passed by the AA or the RA? So everything returned till year. Okay, everything returned till year was old. Okay, that was already there. Now the question is, see this. Once the appeal, this appeal can be filed in form GST APL 07. Okay, and this will be filed electronically. Normally this will be filed electronically, and a provisional acknowledgement will be issued, just like we did just now some time back. Okay, and now the new addition here is, in some cases this appeal can be filed manually also, along with the relevant documents, if registrar allows this. Okay, so manual appeal provisions have been inserted. I hope I'm very, very clear with this. So no major amendment. Okay, no major amendment. So only along with electronically, in some cases, even manual appeal can be filed. I hope I'm very, very clear with this. Yes. Okay. Okay. Then before the section ends, okay, before the same section 112 and 113 ends, before that they have added something new here. Okay. Now what is the new thing? What is the new thing that they have added here? Let's try to understand. Now in this section, okay, in this section, when we were discussing about appeal to the appellate tribunal can be filed by taxpayer also, assessee also, and it can be filed by the department also. Okay, that we studied in section 112 and 113, and in that itself we studied something about memorandum of cross objection. If one person is going and filing the appeal, the other person, the respondent, has the right to file the memorandum of cross objection, and that was required to be done in form GST APL 06 within 45 days plus 45 days from the date of filing the appeal. Do you recollect something like this? Okay, so now they have done some changes, they have put some clarifications there about memorandum of cross objection. So can you see that topic called as memorandum of cross objections in your textbook? So this common provisions have been inserted there itself. Okay, but it is simple, nothing to worry. Okay, nothing to worry. Now, what are they telling us here is, first we had already studied again. Okay, we had already studied that this was required to be filed electronically. Now again, manually it can also be filed. Okay, if the registrar allows the same along with relevant documents, etc., it can be filed it can be filed manually also, right? Now the question here is, what will be considered as the date of filing the appeal? Okay, because that 45 days counting is going to start from there, right? So what will be considered as the date of filing of appeal? For that they have inserted some point. Okay, normally appeal is treated as filed only when the final acknowledgement number with appeal number, etc., is given by the department. Okay, but here they have given certain provisions that, see, whenever the order appealed against is uploaded on the common portal, on the GST portal, order appealed against means against which order you want to file the appeal. Okay, lower level authority order, whenever it is uploaded on the common portal, a final acknowledgement indicating the appeal number shall be issued in form GST APL 02 on removal of defects, if any, and the date of issue of provisional acknowledgement shall be considered as the date of filing the appeal. Okay, now listen. Let's say we want to go against the order of AA or the RA. So if this is already uploaded on the common portal, okay, if this is already uploaded on the common portal, then, and if now that, let's say the taxpayer wants to go and file the appeal. So a final acknowledgement, when he goes and files the appeal there, or he shows his interest that he wishes to file an appeal, then in that case, uh, if a final acknowledgement is issued, okay, that will be normally issued by the department in form GST APL 02, and okay, whatever was your provisional acknowledgement number, okay, or the day on which provisional acknowledgement was issued to you, that will be considered as date of filing the appeal. Okay, just like when we go to file the appeal, when the taxpayer goes to file the appeal, remember we had studied he can use the 05 form, GST APL 05 form, and as soon as he uploads as soon as he files the appeal electronically or manually, a provisional acknowledgement number is issued. So that date, the date of issue of provisional acknowledgement, will be considered as date of filing of appeal. And then from there, within 45 days, this memorandum of cross objections can be filed by the department now. Okay, so if the order appeal against means against which order you want to go and file, if that is uploaded on the common portal, then after that, if we want to go and file, if the taxpayer wants to go and file an appeal, he will file an appeal in GST APL 05. As soon as this is filed, provisional acknowledgement is issued. The date of provisional acknowledgement will be considered as the date of filing of appeal. Okay, now suppose if that order is not uploaded on the common portal, okay, then the appellant will have to say, na, against which order am I going and filing an appeal. So the appellant will submit or upload a self-certified copy of the said order. He already has the order, but it is still not available on the GST portal. So within 7 days, from the date of filing the appeal, that final acknowledgement etc. is given etc. and whenever that person goes and files the appeal, let's say appeal taxpayer wants to go and file the appeal, then he will then in that case he will file the appeal in GST APL 05. If the department wants to go and file the appeal, then it will be done in GST APL 07. And whenever we go and file this appeal, either electronically or manually, within immediately the provisional acknowledgement is issued, the date of provisional acknowledgement. Okay, the date of provisional acknowledgement will be considered as the date of filing of the appeal, and the other party will have to then go and file the memorandum of cross objection. Okay, then now let's say if we did not submit it, first of all, the old order was not available on the common portal. So within a time period of 7 days, the appellant will have to submit the self-certified copy of the order on the GST portal. What if it does not submit within 7 days? That is, what if it submits after 7 days? Then in that case, whenever he submits later, like after 7 days, the date of submission or uploading of some self-certified copy will be considered as the date of filing the appeal. So if the order against which we want to go and file the appeal, if that is available on the common portal, no problem. Provisional acknowledgement will be considered as the date of filing appeal. Okay, if it was not available on the common portal, but we submitted the self-certified copy within a time period of 7 days, then again provisional acknowledgement, because that is issued immediately, so that will be considered as date of filing the appeal. Suppose if it is not available on the common portal and we also uploaded it after a period of 7 days, so whenever whenever you submitted this copy of order on the portal, that will be considered as the date of filing of. Okay, and from there your time limit for filing the memorandum cross objection and other formalities is going to start. Are you clear with this? Yes. So this is the small clarification that they have given in case of appeal for both, when taxpayer files the appeal or when the department goes and files the. Manageable? Yes. And the last amendment, okay, last amendment in this section, is talking about withdrawal of appeal or application filed before the appellate tribunal. Okay, now let's say that can be filed in GST APL 05 by us and 07 by the department. What if they wish to withdraw? So for that they have given the withdrawal forms APL 05W or APL 07W that can be done. Yes, and now suppose if your appeal has been already accepted, okay, if your appeal has been already accepted by the GST 80, then if you want to withdraw, then it will be subject to approval by the GST-AT within 15 days of filing of such application. So whenever you file this withdrawal application, within 15 days, GST-AT will see that should we withdraw, should we allow them to withdraw, or should we not allow them to withdraw. And suppose now, if once you have withdrawn, okay, suppose now you have withdrawn, and now if you want to again go and file an appeal, make sure you are there within those time limits, original time limits. Okay, make sure that you are there within the original time. Are you clear with this? Yes, this is nothing but the original time. So this is all about, I think, yes, this is all about your changes, amendments in section number 112 and 113. Manageable, small amendments, okay, nothing big. Okay, then going on to the next one, that is mandatory pre-deposit. Okay, mandatory pre-deposit. Now, in this, we had already studied about two things, right? That if you want to go and file an appeal before AA, then some pre-deposit is to be given. If you want to go and file an appeal before the AT, okay, GST-AT, then again, there was certain pre-deposit that you had to pay. Okay, now what they are telling, and what was the benefit of paying this pre-deposit is, whatever amount of pre-deposit you have paid, for that amount, there will be no recovery proceedings that will be started till your appeal is disposed of. So at least you are safe. Okay, your assets won't be recovered till the time the appeal is disposed of. I hope you recollect this much, everyone. Yes, so now for that they have given a facility by way of a circular. See, just read this first paragraph. Second is again procedural. Okay, just read the first paragraph. Only that much is important for the timing. So now they are telling that it is important to note that if any person files an appeal in accordance with the requirement of section 112 subsection 8, that is after the pre-deposit, the recovery proceedings for the balance amount is deemed, the recovery proceedings for the balance amount is deemed to be stayed till disposal of appeal as per section number 1129. So basically, if you have paid the pre-deposit as per that particular section, as per section 1128, then in that case, your recovery proceedings will be stopped till the time the appeal is disposed of. Okay, but what are they telling? Portal problems, portal problems. Now, however, as the taxpayers were not able to file the appeal under section 112, taxpayers, okay, in appellate tribunal against the orders of appellate authority. In some cases, if we are not able to file the appeal against AA's order before AT, and if we were not able to file the appeal, then we were not even able to make the pre-deposit. If we were not able to make the pre-deposit, then taxpayers told that, boss, you did not pay the pre-deposit, so now we will do the recovery. Okay, but that was because of the errors, that was because of the technical issues that the taxpayer were not able to file the appeal. So in that case, my stay proceedings would have started. So now what are they clarifying it? Let us make us easy. Okay, so they are telling to the taxpayers that, okay, if in that facility or if in that place you are not able to pay the pre-deposit because you were not able to file the appeal, then in that case, please go to the GST common portal, go to services tab, go to ledger tab, go to payment towards demand from the dashboard. Okay, whatever is the amount okay, that you can calculate as per pre-deposit provisions, please calculate and please make the payment. Okay, if your payment is successful, then that amount will be considered as pre-deposit, and then please go and file an undertaking or declaration with the proper officer that he will file the appeal against the that the taxpayer will file the appeal against the said order before appellate tribunal as and when it comes into operation within the prescribed time. And sir, I have already done the pre-deposit, so please do not start any recovery proceedings. Please let it stand still. Are you clear with this? Yes. And if any taxpayer has already paid the full amount that was intended to be paid through a prescribed form, in such cases, the said person can file an application electronically to adjust the payment made towards the said demand. Until the time the functionality is made available on the common portal, the concerned taxpayer may intimate the proper officer about the same, and on such intimation, the proper officer may not insist on any recovery. So technically, if I am not able to file the appeal to AT against the order of AA, then I was not even able to pay the pre-deposit also. If I was not able to pay the pre-deposit also, then my recovery proceedings could have started. So now they are telling, okay, no problem, go to the dashboard, pay it through another mode, inform to the proper officer that, sir, whenever the functionality gets opened, I will pay the amount. Okay, I will pay the amount. So till that time, I will file the appeal within the time limits. So, and I have already paid the pre-deposit in form of this demand taxes. So please do not start any recovery. Manageable till here? Yes. So this was one small clarification that they have put in this pre-deposit. Yes. Okay. This was your second part of amendment in your appeals and revision. Now let's go to the last amendment. Okay, last circular that they have put. Do you recollect at the end of the chapter we did the section number 120? Section number 120. In 120, they had given certain cases where appeal cannot be filed. Okay, where appeal cannot be filed by the department. So there we had studied that just for the sake of it, just to increase the number of appeals, just because the number of appeals by the department, okay, by the department were going on increasing. So we had studied a point that the CBIC, the board can fix the monetary limits for filing of appeal by the officers, by the department officers. There is no restriction on the taxpayer, but the CBIC, after taking the recommendation from the GST Council, etc., now they have fixed what? They have fixed the monetary limits. They have fixed the monetary limits for filing of appeals or application by the department before GST, High Court and Supreme Court, before the last three authorities. Okay, again I am telling you, taxpayers, they do not have any limit. Okay, for whatever amount of dispute they want to go for appeal, they can go. Okay, this is only for this restriction is applicable only for when the department wants to go and file an appeal against the taxpayer. Okay, so till the last lecture what we had studied was they will fix the monetary limits. Okay, but now they have actually fixed. Okay, now they have actually fixed this monetary limit. So if the department, again I am stressing, if the department wants to go and file an appeal before GST, okay, monetary limit is 20 lakhs. Ma'am, what is this 20 lakhs? Wait. If department wants to go against High Court, the limit is equal to 1 crore. If the department wants to go against Supreme Court, the limit is 2 crore. Only if the amount of tax involved in the dispute is this much, then only the department can go and file an appeal, not otherwise. Okay. Now, ma'am, what is this? How do we calculate this 20 lakh, 1 crore, 2 crore, etc.? So they are telling, if this pertains to tax amount. Okay, if this pertains, no interest, no penalty, only basic tax dispute, then please take the total of CGST, SGST, UTGST, IGST and compensations as if the value exceeds rupees 20 lakhs, then only you can go and file an appeal. Only the department can go. Okay, taxpayer, even if the amount is 20,000, they can still go. I am talking about GST 80. Okay. So if you want to go against GST 80, limit is 20 lakhs and similarly 1 crore and 2 crores for High Court and Supreme Court. So only tax amount, consider these figures. If the order relates only to interest, consider the interest amount. If the order pertains to penalty, please consider the penalty amount. If the order pertains to late fee, please consider the late fee amount. If it does not have tax, but it has interest plus penalty plus late fee, consider the aggregate of all the things. Okay. If it pertains to erroneous refund given to the assessee, then in that case, whatever is the amount of refund of taxes. Okay, so this is how the limits are required to be determined. Are you clear with this? Okay, and then they had given these points we had already considered. Now, they have given certain exceptions. What are they telling us here is, in some cases, these monetary limits are not applicable. Basically, we are talking about the exception. Okay, in some cases, the monetary limits are not applicable. That is when you have to go on the merits of the case. Okay, even if the monetary limits is less than this 20 lakh, 1 crore, 2 crore, but it is totally prejudicial to the interest of the government, then in that case, you will have to ignore the monetary limits. Okay, then the circular is not at all valid and still the department can go and file the appeal. Ma'am, in which cases? Okay, when any of the provisions of the law is against the Constitution of India, when any of the rules or regulation is ultra virus. Okay, CGST rules is ultra virus to CGST Act. Forget about the limit. You can definitely go and file an appeal. When any order notification instruction is against, is overriding ultra virus, the main acts. Your rules and regulations were against the main act. Your order notification etc. is against the main act. Then in that case, you cannot rely on those orders, notifications etc. You will have to go and file the appeal. Or if the matter relates to valuation, classification, refunds, place of supply or any other issue, please ignore the monetary limits and please go and file the appeal. Okay, and so on and so forth. So they have given certain merits here. Okay, they have given certain cases where monetary limits, that is this 20 lakh, 1 crore, 2 crore can be ignored. Okay, it can be ignored and you can definitely go and file the appeals. Are you clear with this? Yes. And see, suppose if once a proper officer has not gone and filed an appeal because of the monetary limits, that does not mean that same is applicable for other officers also. Okay, in one case, let's say in one case, the limit was, within the monetary limits. Okay, so because of that, the tax officer did not go and file an appeal. Okay, in the second case, let's say in the second case, again the amount was less than the monetary limits, but we had some other merits. Okay, then in that case, in the second case, the department can definitely go because these two are two different cases. Yes, so this is how they have fixed the limits. Okay, but again, I'm telling this limits is applicable only for department. Okay, and if the merits of case is so good, and in that case, you can ignore the monetary value and the department can still go and file the. Are you clear with this? Yes. So these are your amendments, clarifications, additions, and appeals and revision chapter. I hope it is manageable. Yes. Okay. Done. Okay. So let's start with one small amendment that is there in your miscellaneous provision chapter. Basically, they have put this by way of a notification. Very simple. Okay, you can simply do, if you are following the notes etc., you can simply do the correction in your the addition, the amendment in your textbook itself. Very small thing. I hope you recollect section number 171, which was talking about anti-profiteering measure. Do you recollect? Thoda yaad hai? Yes, anti-profiteering measure. So now in this case, the government had said that whenever the government is doing some reduction in the tax rates, okay, the benefit should ultimately pass on to the consumers. So in anti-profiteering measures, in anti-profiteering authority, etc., the government was going to determine that if government has reduced the GST rate, has the companies, okay, which are dealing into that goods or services, have they also done the corresponding reduction in prices? Okay, let's say now you must have heard about the news on sweets, on some namkeens, etc. They have reduced the GST rate. So now what we need to check is whether the MRP of the products have gone down because of the benefit given by the government. Means ultimately, has the benefit been passed on to the consumers or not? Okay, so for that purpose, this anti-profiteering measure was there, and for that they had established this anti-profiteering authority. Okay, what we had already studied. Okay, first let's try to recollect what we had already studied. In this, we had already studied that earlier. Okay, earlier there was a National Anti-Profiteering Authority. Okay, NAPA was there. Earlier, NAPA was there. Then after that, this NAPA got abolished. Okay, this got abolished from 1st December 2022. It got abolished, and then they had told that, okay, if there is any customer, if there is any consumer who is filing any complaint, then that will have to go to the DGAP, and then DGAP will ultimately give the report to the Competition Commission of India. So ultimately, Competition Commission of India was the final authority now, till now, who is going to deal with all the matters relating to anti-profiteering measures, etc. Do you recollect something like this? Now, what changes they have done is, they said, we want to reduce the burden on CCI. CCI already has too many cases to be done under its own act, etc. We want to reduce the burden on CCI. So, in this anti-profiteering authority, okay, in this anti-profiteering authority, they have included appellate tribunal, your GST 80, okay, your appellate tribunal. So now they have told that from 1st October 2024, anything that is related to your anything that is related to anti-profiteering authority, that will be dealt by principal bench, main bench, principal bench of the appellate authority. It will listen to the cases of anti-profiteering measures. Yes, so principal bench of appellate authority. See, this will have the corresponding effect in your appeals and revision chapter also, in the roles and responsibility of GST 80. So please remember, instead of CCI, now the new authority who is going to deal up with these cases is going to be the principal bench of appellate tribunal. And from 1st April 2025, they have brought a sunset date for anti-profiteering. That is from 1st April 2025. From this date, central government has appointed 1st April as the date from which anti-profiteering authority shall not accept any request. So basically CCI. Okay, central government, CCI comes under central government. So CCI will not accept any request for this anti-profiteering thing, and everything will go to whom? Everything will go to the GST 80. Okay, they are telling that this is problem related to GST. Okay, so this will be dealt by GST 80. CCI will now be totally out of the picture. I hope I am very, very clear with this. Manageable? Okay, just this much. Sure, done. Okay, so let's start with the last addition, one small addition that they have done in this import and export chapter under GST. So this is basically talking about a specific supplier, online money gaming. Okay, online money gaming services, which are online supply, not services, supply of online money gaming thing, which is provided from outside India to a person who is situated here in taxable territory here in India. Okay, the service provider, the supply provider is situated outside India, online money gaming. Okay, this person is situated outside India. This person is providing services to a person who is located here in India. Now, in our initial chapter, schedule number 3, we had seen actionable claims other than those 6 actionable claims, right? Those are not a supply. That means those 6 will be considered as a supply and that will be taxable, right? So when this person is giving a supply to a person who is located here in taxable territory, in this case, the supplier was liable to pay the tax. Okay, the supplier was liable to pay the tax. So ma'am, but this person is situated outside India. How will this person pay the tax? So no problem. You will have to take simplified. You will have to take simplified registration. You will have to take registration here in India. Okay. For that, they have prescribed a simplified registration scheme. They will have to furnish returns also because they have to pay the tax and all those things. They have to furnish the return in form number GSTR 5A by 20th of the next month. Okay. For all the supply done during this month, by 20th of the next month, they have to furnish this return also. If you have a representative here in India, very good for payment of tax. If you do not have a physical presence here in India, or if you do not have a representative also here in India, please establish an office here in India only for the purpose of paying the taxes. Right? Now, suppose if you don't take registration here in India, suppose if you don't file the returns, etc. here in India, boss, we will block your access. Means you will not be able to provide the services from outside India because we need tax. Okay, we need tax. Are you clear with this? Normal, this was the addition that they had done under import and export under GST. Very, very simple, very, very manageable. Yes, everyone? Okay, only this much done. Okay, so let's start with the amendments under refunds under GST chapter. Very, very simple amendments, very, very small amendments, mostly procedural amendments are only there. Let's start. The file that you are seeing here on the board, this is the amendment file. And if you have the textbooks with you, I will show you the places where you are required to do the amendments in your textbook also. Okay, all these amendments are already done in your 3rd edition book. Okay, if you are having any earlier edition book, then in that case, you will have to do the correction in your or the amendments in your textbook. Okay, now under refunds under GST, the first section that is coming, that is section number 54, where they had given us the situation, okay, due to which the claims can arise, refund claims can arise. In that, one of the pointers have been added. Okay, one of the pointers have been added. This is the point, same point. Okay, same thing I've put in the amendment file also, and same thing has been put in your main file also. So what is the extra? What is one more situation where you can claim refund under GST? So suppose whenever you are doing, okay, whenever you are doing any export, okay, whenever you are doing any export after payment of, there were two options. You can do the export after payment of GST, or under LUT or bond, etc. So suppose if you have done the export after payment of taxes, and after doing the export, let's say your the price of export, okay, the price that you're charging from the other country person, if there is an upward revision, okay, if the price has changed, let's say earlier the price was $10,000 and now you're charging $12,000. So can we see there is an increase, upward revision of $2,000? So if there is an upward revision of that $2,000, on that now you will be paying the IGST to the government. Okay, already you have in the shipping bill, etc., you had put $10,000. Okay, in the shipping bill, etc., you had put $10,000. On that you would have already paid the IGST and already claimed the refund. Now there is an upward revision of how much I said? $2,000. Okay, so now can I say on this $2,000 you will now have to pay the IGST? And now once you are paying the IGST, can we say you will now again ask for refund on this $2,000? Refund of the IGST paid on this $2,000. So they are telling yes, no problem. If there is an upward revision in the prices and if you are paying the IGST to the government, government will give you the refund. Okay, so that is one extra case that has been added here in section number 54. Are you clear with this? Okay, now related to that, what all things, what all are the other amendment? So whenever you want to claim a refund for that, remember we had seen this form GST RFD 01. Yes, so again, whenever there is this upward revision after you have paid the IGST, okay, on that extra amount, after that you can fill this form GST RFD 01 through a common portal, electronic portal, and for this additional, for the refund of that additional IGST. So basically, even if there is an upward revision in the price, okay, even if there is an upward revision in the price, here it is, then also the additional amount of IGST that you have paid to the government, of that you can claim a refund by filing the refund application in this particular form. Okay, now just try to understand, this does not happen automatically. Okay, earlier what we had studied was shipping bill itself was considered as a refund claim, but here shipping bill was already filed earlier, right? So now you'll have to file a separate refund application for the extra amount of IGST that you have paid. Time limit is going to remain the same 2 years from that relevant date. I'll show it to you in our main notes also. Do you recollect we had studied this time limit within which the refund can be claimed, etc.? That was 2 years from the relevant date. So same way here also, same way for that extra amount of IGST paid, the refund can be claimed within 2 years from the relevant date. Yes, so same 2 years time period will be applicable here. And last, yes, one more point is rule number, the changes in rule number 89.2. Okay, changes in rule number 89.2. Now, whenever we were claiming any refund, okay, whenever we were claiming any refund, we had to submit some documentary evidence. Do you recollect that? Yes, in different cases, for export of goods, export of services, export of electricity, we had seen the list of documents, etc. Similarly, now whenever there is an upward revision, can you see this? Whenever there is an upward revision in the price of the goods subsequent to exports, then again for that you will have to submit certain documents. When you are submitting your GST RFD 01 form, along with that you will have to submit these documents. Okay, the proof of payment of IGST, then your old shipping bills, etc., export invoices, then how much amount of refund you have already got, how much amount of new refund you are applying now, proof of payment of taxes to the government, the CA certificate, etc., that you have received that extra money from the other country, etc. All these documents, documentary evidence you have to submit. Okay, please, no need to by heart this list, but just read it once. Okay, because now in the latest ICAI material which they have released for May 25 and November 25, they have put a footer there. Okay, they have put a footnote there that these are not relevant from exam purpose. These are not relevant from exam purpose, but you just need to know. Just because this is an amendment, just read it once. Okay, so these are nothing but the additional documentary evidence that you need to submit along with the refund application. Are you clear with this? Yes, and the last corresponding amendment here was this in rule number 96. In your textbook, you can just come to rule number 96. Yes. Again, that was talking about export of goods or services with payment of tax. So we had already studied the basic things about that. What will be considered, that shipping bill itself will be considered as a refund application, etc. GSTR 3B, GSTR 11A, etc. should be filed, etc. This already we had studied, and then they have just reiterated the same thing, that whenever there is an upward revision in the price for the extra amount of IGST that we are paying to the government, we can claim refund in form GST RFD 01, right? And the refund application, the entire process will go as per rule number 18. Are you clear with this? Okay, so this is just a reiteration of the same thing. So till here, basically, till in your amendment notes, if you see, till point number 5, everything relates to that upward revision in prices subsequent to export. Yes, okay. Now after that, going on to the next last 3 points of amendments under refunds under GST, come to rule number 96A. Come to rule number 96A in your textbook. Can you see this? Rule number 96A in your textbook. Refund of ITC paid on export of goods and services under bond or LUT, means this is without payment of tax. Whenever you are exporting any goods or services without payment of tax and you are claiming the refund of the input tax credit, etc., then in that case we had studied two cases. One was in case of goods and the other one was in case of services. Do you recollect this? Suppose if after the expiry of 3 months, in case of goods, you were getting a time period of 3 months. That 3 months from the date of issue of invoice, you are required to export the goods. If you are not exporting the goods within 3 months, then from after the expiry of 15 days or within the expiry of 15 days, you will have to pay the required tax amount plus the interest. Do you recollect that? And in case of services, okay, in case of services, what we had studied was receipt of payment is very, very crucial. Receipt of payment is very, very important. We had studied something like that in case of services. So for services, they had given us the time period of 1 year. Remember, 1 year from the date of issue of invoice for export. If the payment is still not received, from the other country, then in that case, once that 1 year time period gets over, from that day, within a time period of 15 days, we have to pay the tax amount along with the interest. So now earlier, what was the time period? Time period was 1 year. Earlier, it was 1 year from the date of issue of invoice or such further period as may be allowed by the commissioner. Only this much was written. Now they have added one more parameter in that, 1 year or the period as allowed under FEMA. FEMA means RBI. Okay, 1 year or the period allowed under FEMA by the RBI, whichever is later. So 1 year time period. Okay, 1 year time period or the FEMA RBI time period, whichever is later. We will wait till then. If the payment is not received, then in that case, within 15 days, you are required to pay the tax along with interest. Okay, so now totally we have got three parameters. First one is 1 year. Second one is the extended time period or the allowed time period under FEMA RBI. Okay, or such further period as may be allowed by the commissioner. Are you clear with this? So if the payment is not received within that much time, then in that case, we are required to pay the tax along with the interest. Okay, so basically one parameter has been added here. This was the next amendment, this green thing that is written. Manageable? Yes, because I don't know if you recollect or not, or if you have ever studied or not. In law FEMA, we have already studied about this thing, export. So in that case, RBI has powers to extend the time limit for receipt of payment in case of export of services. Right? Okay. Then after that, going on to the next one, please come to section number 55 in your textbook. Section number 55 in your textbook. Yes. We have already studied, not a big amendment, not a very different amendment, procedural only. Section number 55, where we had studied about refund to UN bodies, embassies, etc., etc. Canteen stores department we had studied. Do you recollect that? Okay, that canteen stores department comes under the Ministry of Defense. Remember that if the whenever the canteen store department, okay, whenever the canteen store department is purchasing some goods and it is providing to its unit run canteens of the CSD or to any authorized customers of the CSD, etc., then in that case we had studied CSD will be eligible to get a refund of 50% of the CGST, IGST paid on its inward supplies. Right, this is what we had already studied. For that they have just added a few conditions. What are the conditions that they have added here? So we had already studied that they can apply for this refund on quarterly basis. Okay, so this will be done electronically on the common portal. That is first thing. Second thing, whatever application they are making, it will be dealt in the same manner as if a normal person is applying for a refund as per rule number 89. And refund of tax paid by the applicant shall be available if. What are the conditions when the refund will be available? Three conditions they have added here. See, third condition is very, very simple. CSD should have received the goods and they should have supplied to specific persons. That was a basic condition. Okay, next one. The inward supplies that CSD has received. CSD को जिससे मिल रहा है. Okay, CSD has taken it from a registered person against a tax invoice, and that person has put the details in his GSTR1. Okay, the supplier has put the details in his GSTR1 and supplier has also filed his return in GSTR3B. Okay, these are the basic condition that must be fulfilled, and name and GSTN of the applicant is mentioned in the tax invoice. So basically, if all these conditions, all these procedural aspects are fulfilled, then in that case, CSD will be eligible to claim the required refund. Is it manageable? Okay, only procedural, no conceptual amendment. No conceptual amendment. Okay, that is given here. That is given here in this canteen stores department. Yes. Okay. And the last one. Please come to rule number 89. That formula. Yes. In rule number 89, where we had studied about these things. 89.4, 89.4A, 4B, etc. That point. Do you recollect we had done this, the most important part of the refunds chapter? Yes. How much amount of refund will be eligible? We had done a formula, etc., etc. also. Yes. Now see what is the changes that is done here. Rule number 89.4A and rule number 89.4B has been deleted. Okay, rule number 89.4A and rule number 89.4B has been deleted. I don't know if you recollect or not. Okay, just try. Okay, when you read the chapter, then you will be able to recollect. In rule number 89.4A, it was talking about when the supplier had taken the benefit of deemed exports. In that case, it was taking the refund of the ITC, right? And in 89.4B, it was talking about merchant exporters, it was talking about advanced authorization, it was talking about EPCG scheme, etc. In that case, we were talking about the refund of the ITC, refund of the unutilized ITC. So basically now these rules, rule number 89.4A and 89.4B has been deleted by the government. So correspondingly, wherever in the definition, okay, wherever in the definition of input, wherever in the definition of adjusted total turnover, etc. Wherever we had the references of Rule 89 4A and 4B, we used to exclude it because we had discussed that that will be considered, refund of that will be anyway available separately. So wherever we had the references of Rule 89 4A and 89 4B, that has to be excluded. Okay, so Rule 89 4A, 4B has been totally removed. That is the last point. Sub-rule 4A and 4B of rule number 89 have been omitted. Yes, so things have become simpler now, at least for the purpose of calculation of the refund. Yes, I hope I'm clear till here. I hope it is manageable till here, everyone. Yes, so these were your small amendments in the refunds chapter. Yes, same thing I have put here also, okay, in the amendment sheet also, and same thing has been put in the respective places in your third edition book also. Yes, okay, it's done.